streaming live from the 4 Points Hotel. We're streaming live on our YouTube channel, BDO East Africa. We also are coming to you live on our Zoom platform. Reach out to anyone from BDO, Signum, or Mez Advocates. They can help you log in, but also you can follow the discussion on all platforms. And we have a hashtag. The hashtag is Islamic Finance Conference 2023 on all platforms, Twitter, LinkedIn. So let's follow the discussion. Let's generate the discussion, and let's make it very, very impactful. My name is Edwin Michael Echiba. Very privileged to be your master of ceremonies this morning, and it's a very, very exciting conference. Brace yourselves for very insightful, pertinent, very, very candid discussions. It's a very timely topic. Islamic finance is here, so the timing is right. The discussions are very well prepared. Ladies and gentlemen, we have a program. Those of us who can check on your tables, there's a program there that shows what will be taking underway. We shall be starting off with welcome remarks from the people that are at the helm of the three firms that are partnered to bring to you this conference. Thereafter, we shall have remarks from our guest of honor. We shall then have our keynote address from our esteemed guest. Then thereon, we shall bring the debate back home. We shall have perspectives from the regulators, the Bank of Uganda. We shall take the debate to our policymakers. We shall have a presentation from some of the Ministry of Finance. Then we shall have fire chat discussions. We shall have breakout sessions that will be speaking to practical experiences, details of Islamic finance. We're hearing from people in varied sectors. We have the clients who have enjoyed these services. We have practitioners, and all these are distinguished panelists. So brace yourselves for very, very engaging deliberations. We have 2 panels. Then thereafter, we shall give an opportunity to we, the audience, those joining online and those in physical attendance, to partake in the discussion. Pose a question, pose a comment, we shall involve you, shall indulge you. Then we shall also launch the Islamic Finance Hub. That's the brainchild that is getting birth today, so that's another interesting avenue. Then, we shall come to the end of our conference. Ladies and gentlemen, our time is fast-tracked. I pray we commence. Then, few housekeeping rules. Those of us who are joining online, please indulge the debate. Our Q&A is up and running. Post your questions, your comments, and certainly we are going to involve you. And to kick us off, I would like to call 3 people, a lady and 2 gentlemen, who have been at the helm of this whole conference. They head the firms that have put together this amazing conference, and it's very imperative that we listen to them and let them come and give us a welcome remarks. Ladies and gentlemen, 3 firms, BDO East Africa, Signum Advocates, and Mez Advocates, have partnered together, collaborated together to bring to you the inaugural Islamic Finance Conference, the very first of its kind in Uganda, and certainly it's living to the billing. So allow me invite Ms. Mabel. Mabel is a managing partner at Mez Advocates. Mabel, you may. A round of applause for Mabel, ladies and gentlemen.
Good morning, ladies and gentlemen. Good morning. Have you had breakfast? You're very welcome to this inaugural conference on Islamic finance, which we have put together in partnership with BDO and Signum Advocates. When I look around the room, I see a wonderful cross-section of representatives from both the private and public sectors. And this is the exact blend of key players we need to push this forward, this important topic, which is Islamic finance. The organizers have been very active in fostering the development of Islamic finance in Uganda and creating awareness of the benefits of this alternative finance to the Ugandan economy. Part of our objective today is to show that this type of financing is inclusive and as such applies to all religions. I am positive that today's discussion will bring about innovative solutions and tangible actions to advance Islamic finance in Uganda. We have worked with several partners to successfully deliver this conference. I would therefore want to thank all our partners for the support you have given us and the entire team. In a special way, I would like to welcome and thank all the speakers and panelists for sparing your precious, valuable time to come to speak to us today. Some of our speakers have flown all the way from the UK. Professor, thank you so much for coming to be here with us today. We appreciate. Thank you very much. Before giving the floor to my colleagues, I want to thank the organizing team from BDO, MESA, and Signam Advocates for creating a platform where these innovative solutions can emerge and working very hard to create a hub that we shall launch later today. I am also thrilled to welcome many experts and professionals as participants. Thank you all for being here today and for everything we shall do together to advance Islamic finance in Uganda. Thank you all.
Ladies and gentlemen, a bigger round of applause to Mabel. Thank you very much, Mabel. Mabel set the ball rolling for an amazing conference. But that was Maize Advocates, but another firm that has been very instrumental in having this and putting this together is BDO East Africa. And ladies and gentlemen, allow me to invite the managing partner of BDO East Africa to give his opening remarks as well. Mr. Kenneth, you're welcome.
Thank you, Edwin. Good morning, ladies and gentlemen. Salaam alaikum. I want to begin by thanking all of you for honoring our invitation to this inaugural Islamic Finance Conference in Uganda. I also want to thank our colleagues from MESA Advocates and Signam Advocates for agreeing to partner with us to organize this conference. There are three good reasons why BDO agreed to collaborate with our colleagues from MESA Advocates and Signam Advocates. I'm mindful here, I'm using the word colleagues, but I know lawyers don't want to associate sometimes with accountants. When you are not a landy friend, you are not a colleague. So I will probably need to replace this with friends. So, as you may know, and already know that Islamic finance is a way to manage money that keeps within the moral principles of Islam. And for me as an individual, the moment you put the word money in a sentence, I'm always interested. That's on a lighter note. But one of the core reasons why BDO agreed to partner with MESA Advocates and Signam is as BDO, we are big with collaborations, okay? And that is driven by our immense desire to be the leaders in our chosen markets. And you know, if you're a very good leader like BDO, good leaders don't compete, you just collaborate, okay? So for us at BDO, when you come and approach us and say you're seeking for collaboration, the answer is usually yes, because we are not in competition with anybody. The second thing is I share the same really commitment like Mabel. We believe that Islamic finance and Islamic banking has the potential to positively impact the Ugandan economy. And I want to give a reason why. If you remember, or if you recall the financial crisis that happened in 2008, 2009, I think 2007, 2009, that crisis shook the financial services sector. Ironically, this crisis did not affect the Islamic financial institutions too much. And the reason is simple. When you look at Islamic financial institutions, their state of credit growth is managed in a very prudent and transparent way. They really carry out asset-based investments, and they really manage systematic risk very well. So the financial services sector in Uganda here is bound to learn and be able to reap from this subject matter. And it is also true, as Uganda, we've been trying to increase the financial inclusion topic here in Uganda. This subject has the ability to impact that. So as BDO, we are very keen to make sure that we promote this subject because it has the potential to positively impact our economy. The third aspect is also close to our values. As BDO, we positively impact our clients and the community by sharing knowledge. But more importantly, we provide solutions to challenges that clients face. And this topic has a really good opportunity for us to learn, a good opportunity to provide solutions. So there is no way we could sit out of this subject matter and promote it. So because of those three core reasons that I've given, it is the reason why we are here. I want to end my remarks by thanking the speakers and the panelists that have accepted to be part of this conference. Professor, we thank you for traveling all the way from UK and come to this little country called Uganda. I know it's your first time in Uganda, and sometimes the internet doesn't paint us very well. But the fact that you took a leap of faith and accepted to come here, we thank you. We also want to thank the rest of the panelists who have accepted to be part of this conference. I want to wish the panelists and the speakers good deliberations. To you, our clients, and those who are potential clients for BDO, I pray and ask that you learn something from this conference. If there's anything that you can really live today and say your time here was not wasted, is to be able to learn one or two things. So with those remarks, I want to wish you all good deliberations. Thank you.
Ladies and gentlemen, a bigger round of applause to Kenneth as he makes his way off the stage. Thank you very much, Kenneth. I think Kenneth has stressed the essence of collaborations and partnerships. The ultimate beneficiary is you, our dear clientele, when these three amazing firms partner together to bring you such an insightful and informative conference. You, our dear clients, are the heart of our synergies. Ladies and gentlemen, the third firm that partnered to bring you this amazing conference is Signum Advocates, and it's my pleasure to invite Ian Mutibo, the managing partner at Signum, to give his opening remarks as well. Ian, you're welcome.
Thank you very much. You know, when you have two great speakers coming before you, don't know what to say after that, but I will try. Ladies and gentlemen, we thank you for honoring our invitation to this inaugural Islamic Finance Conference. Many people like call it Islamic finance. I like call it Sharia-based lending or alternative finance. And this is because the principles of Islamic finance have been with us, even in African tradition, long before, only that they have now been enshrined in Sharia. I don't want to preempt the speaker's discussion, but I'll tell you a little bit of history about ourselves, MESA and BDO. This is not a union that started yesterday. Myself and John Jett in 2015, before the law was changed, interacted with Islamic finance, with the Bank of Uganda advising on taxation of Islamic finance. By that time, we were with KPMG, and I'm happy that a KPMG partner, Mr. Assad, is here. We started the journey and it sparked enthusiasm from our side on how to work Islamic finance in Uganda. And at that time, there was no regulation. There was nothing to look at for Islamic finance, but didn't stop us. In 2018, that's 2 years later, I met with Sophie. He's a partner at Mesa Advocates. And we're sharing a light moment outside with a picture of us in 2018, very small, no flesh. And now, when we have children and other things. And in 2018, we met in Nairobi with Sophie at the East African Islamic Finance Conference. And again, exchanging ideas on how to further advance Islamic finance in Uganda. At that time, we had a law in Uganda, but it was not operational. Nothing was forthcoming. We didn't stop. We kept exchanging ideas. We kept interacting with each other to make sure that we advance the aspects of Islamic finance in Uganda. And it didn't take long. In 2021, 2019, myself and Jet once again interacted with our good client, they are here, on advising them on their diminishing musharak and a tax aspect. We started pushing for the regulation to change, especially in the tax aspects, and the regulation finally changed. Now, on the other side, my good friend Sophie was also interacting with Salam Bank to make sure that the first bank is set up. So this is not a union that came up yesterday. It has been in the pipeline for a long time. When we sat together with BDO, Mesa, and ourselves, we thought about how to then realize the dream. How to put together a sensitization drive to make sure that everyone understands what this Sharia-based lending or alternative finance is about. The synergy is awesome. Synergy is amazing. We have got speakers from across the world. You'll see them from London. Dr. Da has flown in from London at his own cost, by the way, to be able to disseminate information. It's from the Cambridge Institute of Islamic Finance. And he has agreed to give us a special detailed masterclass tomorrow. For those of you who are interested, please don't miss this. Someone from Cambridge, you're going to be in Cambridge University in Uganda. So it's an opportunity for you to be with the best that have done this. We have a team from Latham and Watkins as well, from Saudi Arabia and from the UK. They're going to join us to give us deeper insight on how to structure financing from Islamic finance in both predominantly Muslim markets and those markets that are not predominantly Muslim, like Uganda. This conference, therefore, is a place for knowledge. If you're an enthusiast for finance and you like to know how best to have this done, this is a place. Ladies and gentlemen, please, I think we should stand for the guest of honor, Honorable Saida Bumba. She just come in. Honorable, you're very welcome. We may take our seats. I know protocol deserves that when the guest of honor comes, I stop. I will finalize, then we can start the formalities. I also want to welcome the Deputy Consul of Malaysia. He's also here. He has also just joined us. And I would like to wind up in 2 minutes so that we can start the formalities. This conference is a sharing of knowledge and ideas. What we request the team that's here to do is first to unlearn. Whatever you know about financing, leave it outside. And let us relearn how we have alternative finance. This is what I want you to remember, not to forget. Islamic finance has the same exact concept as conventional finance. It's just a different route. Let us learn, unlearn, and relearn at the conference. Thank you very much for coming, ladies and gentlemen.
Thank you very much, Ian. Ladies and gentlemen, a big round of applause to Ian. Yeah, Ian has just confirmed that the marriage between Mesa, Signum, and BDO is watertight. Those intending to break it, sadly not. But also, yeah, Ian's flashback, where they came from, it just demonstrates that BDO, Signum, Mesa are trailblazers. The time when Islamic finance was making its way into Uganda, we were at the heart and will certainly continue to be at the heart. Thank you very much, Ian. Ladies and gentlemen, now that we're fully constituted, our guest of honor is in the house. Please allow me to commence the function officially. And it's imperative that, yeah, we communicate to the good Lord. Yeah, it's very, very important that we dedicate the conference to the good Lord. And if I look in the room, I'm looking for the person who looks holiest this morning, someone who prayed this morning. And I think I see someone over here. Sophie, do you mind giving us a word of prayer? A round of applause to Sophie as she makes her way. We shall confirm if indeed she looks holy.
Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, ladies and gentlemen. It's a pleasure to have all of you here. Let's pray. In the name of God, most gracious, most merciful, the owner of time, we thank you for this day. We thank you that you pre-measured and predetermined that this would be the day that we have our conference today. We thank you that you have joined us with various people from all walks of life, those joining on online and in person. We thank you that we thank you that you prepared the entire team, both at BDO, Signum, at Mesa, to organize this conference where we're going to share on the topic of Islamic finance. The journey of Islamic finance in Uganda has been long. We are happy that it is officially launched in Uganda. We're happy that we already have a service provider, and we pray that we have more service providers to promote this financial system in this country. We pray for good leadership. We pray for the right dissemination of the correct message, and we pray for protection against the negative excesses that may affect the system in this country. We pray that you elevate our country using this financial system, and we pray that you keep us guided by its Sharia compliance. We pray that it has absolute acceptability amongst all of us, and we also pray that it acts as a vessel to unify us together as a country. In the name of God, I have prayed. Amen.
Thank you very much, Sophie. Indeed, you can confirm Sophie at what they do. So thank you very much, Sophie. Ladies and gentlemen, we're very, very honored and pleased that you are in attendance. Very honored with your presence, and the program is right before you. You can keep looking at it, but our guest of honor is in our midst, and it's imperative that we start with the national anthem. So, IT, if you could just play for us at least the first stanza, the national anthem. We may all be up and rising.
Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuwajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Thank you. We may be seated. Ladies and gentlemen, it's a hybrid conference. Our dear attendees online, we see you, we acknowledge you. Thank you very much for making the time. Let's keep carrying on the debate. The debate is on our online socials. Hashtag is Islamic Finance 2023. We're also coming to you live on YouTube. If you go to our YouTube channel, BDO East Africa, we are streaming live. But also on Zoom, reach out to anyone from BDO, MESA, or Signum. They'll be very happy to avail the details. Ladies and gentlemen, why Islamic finance? Islamic finance has gained fast prominence across the world. The waves of Islamic banking have swept from the Middle East and Northern Africa to Europe and the Sub-Saharan. Pope Benedict XVI, who was the leader of the Catholic Church, his reign was 25 to 2013, is one of those that have commended Islamic banking. And if I may quote, banks should look at ethical rules of Islamic finance to restore confidence amongst the clients. Then the legal, tax, accounting, and regulatory frameworks have been set in place. Africa as a continent is earmarked for growth of Islamic banking. The East African region is alive to its rise. And back home, the frameworks of the law are not sleeping. They've made strides in implementing Islamic finance in Uganda. And if I may borrow from the words of Charles Darwin is an English scientist. His famous quote, "It is not the strongest of the species that survive, nor the most intelligent, but the one most responsive to change." Ladies and gentlemen, the banking sector is not a stranger to change. Agent banking came, bank insurance came, they're here. Islamic finance has come, it's certainly here, it's going nowhere. And the discussion is timely. The forum is right here. And what no better way than having the regulators, the policymakers, the practitioners, our clientele, no better avenue to discuss the trends, challenges, opportunities, and certainly future prospects. That's the context of the discussion we're having this morning at the Islamic Finance. And ladies and gentlemen, we're very honored to have the Honorable Dr. Saida Boumba. The Honorable is the first of her kind. She was the first Minister of Energy and Mineral Development. And she was the second woman on the continent. By the first, I mean the first on the continent, Africa. And she was also the second Minister of Finance, Planning and Economic Development in Africa. She is an accountant, politician, philanthropist, and a banker. She is currently serving as a member of the OIC Women Consultative Council and the Vice Chair of the African Group of the Council. Ladies and gentlemen, it's my distinct honor to invite our guest of honor to address the conference. Please join me in welcoming the guest of honor.
Thank you very much. Brothers and sisters, all protocol observed. Assalamu alaikum wa rahmatullahi wa barakatuh. First of all, I would like to take this opportunity to thank and appreciate the organizers of this conference. I was first exposed to this concept when I was governor of the Islamic Development Bank at the annual general meeting of the bank, which was held in Kazakhstan in 2008. Thereafter, I sold the concept to government, and His Excellency the President was quick to see the opportunity in addressing the problem of high-cost financing, especially for development projects for the private sector. In the budget speech of 2010, I made mention of Islamic finance as a government policy complementary to conventional financing. Government right away started borrowing from the Arab Financing Consortium, mainly from Islamic Development Bank, Badea, Kuwait Fund, and the Saudi Fund for public projects and for the Microfinance Support Center under this mode. The money which is being administered by the Microfinance Support Center to the small borrowers, to the circles, is borrowed under Islamic finance. The legislation process to legalize Islamic financing started immediately. But because there were so many myths around it, it was a slow process. People had all sorts of myths about it. Islamic finance in Uganda was legalized by amendment to the Financial Institutions Act in 2016. And 2 years later, in 2018, to operationalize the amendment, the regulations were enacted. However, some of these regulations had some difficulties. Some of them had stringent requirements which were difficult to meet in a secular state where such financing was new. And recently, I'm happy to report that the stringent requirements, especially on the minimum qualifications of members of the Qadi courts, the Sharia boards, were relaxed, which made the implementation of Islamic finance come to fruition. Taxation and insurance laws were equally amended, and I'm very happy that we have come that far. Though a lot has been achieved on the legal side, there are still many myths about this financing project, with some quarters that still hold that it is only for Muslims and is for Islamization of its users. And this is far from the truth. And this is these are some of the myths which we need to clear. And these beliefs have been the cause of the slowing down on the processes of legalizing the ethical financing we are here to discuss today. Personally, I call Islamic financing ethical financing, but because the Islamic financing is the commonly used term, that's what we use, but otherwise it should be called ethical financing. I would like to note that Islam and Christianity share much in common when it comes to financial services. While global Islamic finance is believed to compromise 2 to 3% of the global financial services, the share of modern-day Christian finance is even smaller. While entities which are involved in areas such as tobacco, alcohol, gambling, pornography would ordinarily be prohibited from most religious usury or interest-based transactions were historically deemed to be as evil in Christianity as in Islam. There is a commonality and there is convergence when it comes to ethical financing, non-ethical activities and projects. In the Bible, in the book of Exodus, chapter 22, verse 25, I quote, it says, if you lend money to one of my people, Among who is needy, do not treat it like a business deal. Charge no interest. End of quote. And that is from the book of Exodus. Again, in the Bible, in the book of Deuteronomy, chapter 23, verse 19, I quote, "Do not charge fellow Israelites interest, whether on money or food or anything that may earn interest." End of quote. You see, this is common to the Christians and to the Muslims. And on the other hand, in the Quran, Surah Baqarah, chapter 2, verse 215, Allah says, I quote, "Those who eat riba," this usury or lending money with interest, "will not stand on the day of resurrection, except like the standing of a person beaten by Satan, leading him to insanity." So you can see how serious riba is from the quote in the Quran. Today, Islamic finance is widely accepted as a $3 trillion industry, offering banking services, insurance, and asset management services in over 75 countries, both Islamic and non-Islamic world. At the community level, the Islamic financial movement has provided the community with yet another cause to rally around, with the unique advantage that this activity brings them over to the rest of humanity, as it is open to all, and it is administered in standards. Today, as we witness the launch of this humble initiative, we need to note that the Islamic banking law was passed in 2016, as I've already stated, but unfortunately, our community has not enjoyed the fruits of it due to the following. One, misconceptions that it is only for Muslims, and it seeks for Muslim dominance or even supports terrorism. Well, those are some of had to fight against. Number two, there has been inadequate support for Muslims on establishing these interest-free services to help our grassroots people and make them equal partners in business and development of their communities. Number three, the regulations in place don't fully favor the new mode of financing to enable it to grow. For example, the market entry capital or reserve required to establish banking services in this area is high, yet the community awareness is quite low. We even hear of rumors of looming increase in central bank statutory reserve on the requirement for Islamic finance. For the insurance sector, the reserve for insurance for insurance provider is 6 billion shillings, and yet for conventional insurance is only 4 billion, a difference of 2 billions. Brothers and sisters, although government has put various good initiatives to reduce poverty and create wealth, these initiatives continue to suffer from poor supervision, equity, and controls that would be easily achieved because they are inbuilt already in the Islamic model of profit and loss sharing, musharaka, in agriculture financing, salam, and trade, murahaba, partnership. Islamic finance, the most important concept about it, it is a partnership. And it is a partnership which requires high ethical standards. The significance of today's inaugural Islamic Finance Conference, emphasizing the community's deliberate effort to play their role in wealth creation through mutual respect-driven financing, that not only creates wealth for them, but also works within the boundaries set by Allah, as mentioned in verse 275 of Surah Al-Baqarah. Such initiatives are very much needed, especially today that our economy and businesses have been hit strongly by COVID and other global economic pressures that all need intervention to recover. Brothers and sisters, as I conclude my remarks, allow me first of all to congratulate Salam Bank, which was licensed immediately. I first heard about their interest about 3 years ago, but because of the source, they didn't progress as fast as they should. But I really want to congratulate you and pray that the Almighty gives you success and you create space for other participants in the sector. One wise man said that when you are counting success, don't look at the level reached, but look at the many hurdles which you have jumped. I think Salam Bank is a success already. As I conclude my remarks, I want to thank the Almighty Allah and the government of Uganda for having given me a chance to be the part of the journey for initiation and implementation of Islamic finance in Uganda through different roles played as governor of the Islamic Development Bank, Minister of Finance, Planning and Economic Development, chairperson for Forum on Islamic Finance in Parliament in the 9th and 10th Parliament, and chairperson of the Committee of National Economy in Parliament. I want to thank, most importantly, all those people who have moved together with on this journey. There are those who are on the forefront, and there are those in the sides, and there are those who are pushing from behind. All of us are winners, and I thank you all. I know many of you are here in this conference, and in a special way, the organizers of this conference, you have really hit the nail on the head. I think where we have reached, we can comfortably say that Islamic finance has come to fruition. Aluto continua by the will of Allah, inshallah. Thank you very much for this opportunity, and I wish you all the best. Have a very good and fruitful deliberations for the success of Islamic finance in Uganda. I thank you. Assalamu alaikum wa rahmatullahi wa barakatuh.
Ladies and gentlemen, those hand claps were not deserving of the honorable. Let's give a bigger round of applause. Thank you. We all agree the honorable spoke very passionately about Islamic finance, and no other better person than the honorable. Yeah, she's been very involved in the formulation, the implementation. Yeah, and she's well grounded. She's proved to us that Islamic finance is premised on very, very strong principles. Yeah, very well embedded in our religious laws, both the Quran and the Bible. And she's really demystified some of these myths around Islamic finance. So thank you very much, Honorable. We're very, very grateful. Ladies and gentlemen, the debate is just getting started. Our dear online audience, we take note of you. We're very, very honored with your presence, and our program is fast running. And ladies and gentlemen, our next panelist is already in the building, and no ordinary panelist. He is a keynote panelist, and this is a gentleman who is very, very passionate, and he's also been at the heart of Islamic finance globally. Sorry, IT. I hope the teething issues are sorted. Ladies and gentlemen, our next panelist is a keynote panelist. He's giving us a keynote address, and this is a gentleman who is very, very passionate and has been very actively involved in Islamic finance on a global, regional, and also is very active in our continent. Ladies and gentlemen, he is currently heading Islamic finance at the Cambridge Institute of Islamic Finance. He intends to transform the Cambridge Institute of Islamic Finance into a global center of excellence for research and training and capacity building in the economies of Muslim and Muslim communities as well. Then previously, our panelist served as a chairman of HD Edb's group of companies, where he developed a global financial advisory business for Islamic institutions, government bodies, regulators. Then the Global Islamic Finance Report, which he founded in 2010, is now in its 9th year and is the oldest such annual document on Islamic banking and finance. Then in 2011, he founded the Global Islamic Finance Awards that have now emerged as the most prestigious Islamic awards globally. Then in 2011, he also founded the Islamic Finance Review, which is the only quarterly print magazine on Islamic finance. Ladies and gentlemen, he's a very distinguished gentleman, and I think in our local context here, we would call him a Muyiribi. He's very actively involved everywhere. A Professor Muyiribi in English is a yeast, yeah? Someone who is very, very actively involved in very many contexts. But ladies and gentlemen, you agree he has a very rich profile, and ladies and gentlemen, it's my distinct honor and privilege to invite Professor Humayun Da, our keynote presenter, and he'll give us a keynote address. Please join me in welcoming Professor.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. And a very good morning. Can I have that thing as well, please? Honorable Dr. Sayyida Bamba, other distinguished guests in the hall, and those who are joining us online, it is my pleasure and honor to be here today to talk about Islamic finance globally. I would like to thank the organizers, MISA, Advocates, Signum, and BDO for giving me this opportunity to share some of my random thoughts on Islamic banking and finance. I have been involved in Islamic finance for about 30 years, and I haven't done anything other than Islamic finance in my life. So I can say that I know nothing or very little about other things, but when it comes to Islamic banking and finance, I think I have a lot of knowledge. I used to joke that if you have any question about Islamic finance, I would be able to answer. And in 75% cases, my answer would be, I don't know. Now, the keynote speech I would like to give today, it is entitled, What Do You Know, or What Do You Need to Know About Islamic Finance? And one simple answer would be that you don't need to know anything about Islamic finance, because it is not new. It is actually part of global financial services industry. Whatever is happening over there, this is being reflected in Islamic finance as well. So if you know about financial services, by default, you would know a lot about Islamic finance as well. Okay. However, there are certain things which must be kept in mind when we are doing Islamic banking and finance, because they are unique to Islamic banking and finance. The first thing anyone who is interested in Islamic banking and finance must know is that this is now a reality. In the 1980s, a lot of people had uncertainty about the future of Islamic banking and finance. I remember there was this one cover page of The Economist magazine, and there was this picture, a person holding, I don't remember if this was right or left hand, in one hand a copy of the Quran, and in the other hand a calculator. And the caption was something like this one: this marriage of Quran and calculator, how long is it going to sustain? Right? And it has sustained, actually. Right? Islamic banking and finance has grown sustainably, consistently, and it has grown even when conventional banking and finance was in difficulty. So it is a multi-trillion-dollar industry. Precisely, this is 3.8056 trillion US dollars industry globally. And this estimate comes from our annual publication, Global Islamic Finance Report, the 13th edition of which is going to be launched next month at around the Accounting and Auditing Organization for Islamic Financial Institutions, AOFE conference in Bahrain. And this estimate, 3.8 trillion, that is based on the figures for the year 2022. Okay, so December 2022, this was the figure. And we estimate that the industry is going to breach the 4 trillion mark by the end of this year. Some observers, they say that it has already reached 4 trillion. And by 2026, Moody's, for example, has estimated that this is going to be a 6 trillion US dollars industry. So this is a growth story. Every one of us should know that Islamic banking and finance is a growing industry. It has grown since the start of this century. It has slowed down in certain years, but the growth rate has been positive. Now, the other question you must answer is, how did it get started? Right. And this would, the answer to this would dispel a lot of confusions and a lot of myths around Islamic finance. Was it Saudi Arabia which started Islamic banking and finance? Because Saudi, when we talk about Islam, we talk about Arabs, we think about Saudi Arabia, but actually when we look at the history of Islamic finance, Saudi Arabia did not start Islamic finance. Was it Malaysia? Yes, Malaysia is a significant player, but did it start Islamic banking? Was it Pakistan? Was it Iran? Was it Turkey? Was it Indonesia? Afghanistan? You know, when it comes to the terrorism and all that kind of things, we think about this country. So did Afghanistan start Islamic banking and finance? And the answer is no. None of these countries actually started Islamic banking and finance. So which country then initiated Islamic banking and finance? And for you, those who are in Uganda, this is a very, very interesting answer. And it is a big surprise. Anyone would like to guess which country started Islamic banking and finance formally as a regulated Islamic bank? I won't blame you, because I am professor of banking and finance, Islamic banking and finance, and we run a program. This is a quiz program. It's called Cambridge Islamic Finance Master. It's like who wants to be a millionaire? And this question, which one of the following is the first Islamic bank in the world? No. Okay. Even not Egypt. Well, we talk about where it started formally. And the answer is the Philippines. It is the government of Philippines which started first ever regulated Islamic bank in the world in the 1960s. In Egypt, what happened in Mitgamar, this was a small saving institution which wasn't even a bank. Okay. Islamic Development Bank started in 1975. Okay. But this happened in 1964, 65. That was the time when the government of Philippines decided, and the story is very interesting, I wouldn't go into the details, but they became the first, and that bank still exists, by the way. Philippines Amana Bank. It had, the names have been changed, but it's called Philippines Amana Islamic Bank. So that was the first regulated Islamic bank in the world. And this was started by non-Muslims. And now someone is saying, why? Okay, you can come to me later, right? Now, this is the third thing you should know, that Islamic banking is BAU. Okay. It's business as usual. There is nothing sinister about Islamic banking and finance. A lot of people would think that, oh, this has something to do with terrorist financing. By the way, after 9/11, there were huge inquiries conducted on Islamic financial institutions around the world, and nothing significant was found against Islamic banks. And this was done by the Americans, other regulators, and so on. Right? So now we say that this is actually business as usual. This is banking and finance with some restrictions. That's it. So it's banking and finance minus certain activities. It's not banking and finance and something more, which could be problematic. Right? So if banking and finance is a regulated activity, this is this much. So the regulators, they look into the activities of banks, and they find, okay, Islamic banking and finance is a bit less of it. So from regulation viewpoint, this is actually easier for the regulators to look into Islamic banking and finance. I come from UK. My government is very, very friendly towards Islamic banking and finance. We are only 5% Muslims in the United Kingdom. 95%, they're non-Muslims. But my prime minister, the previous one, David Cameron, went on the screen and saying that we would like United Kingdom to be the regional, if not global, center of excellence for Islamic banking and finance. And that was the speech he gave when the country issued its first sovereign Islamic bond called Sukuk. So that was issued. Then we have another sovereign Sukuk issued as well. And when it matures, the plans are to go ahead with the third one. So it's not only United Kingdom which is interested in Islamic finance, a non-Muslim country. There are so many other countries as well. South Africa. Right? We run a program called Global Islamic Finance Awards. In 2022, our top award went to the Prime Minister of Ethiopia, Dr. Abiy Ahmed Ali. He's not Muslim. Ethiopia is not a Muslim country. But Islamic banking and finance is now, it's called interest-free banking over there. It's progressing and prospering. Now there are 3-4 fully fledged Islamic banks, about 11 conventional banks. They are offering Islamic financial services. We go to Luxembourg, we go to Dublin, we go to Hong Kong. So many countries where Muslims are only a minority, but they are offering Islamic financial services. Why? Because this is business as usual. In some cases, this could be business unusual as well. I come from London. You pick up any big asset in the central London, whether this is Shard and other Harrods, all these big assets in the City of London, they would have something to do with Islamic finance. So if United Kingdom is interested and is playing a lead role in Islamic finance, it's not because there is this huge love for Muslims. It's actually money. City of London attracts lot of Islamic capital, even if other segments of the financial services are not doing well. Our government, after Brexit, is looking into using Islamic finance as a strategic tool to integrate and cooperate with the countries where Islamic banking and finance is significant. So this is business as usual. Nothing religious about it, as many people would think. I've mentioned this is a growth story. Islamic banking and finance has shown this huge growth. This figure, this comes from our Global Islamic Finance Report. Between 2008 and 2022, Islamic banking and finance has grown. In 2008, for example, 2008, 2009, it was mentioned this was the GFC era. The growth in Islamic banking and finance was phenomenal. Of course, after that, it slowed down a bit, and we witnessed, these 7 years when there was slow growth, but it was significantly higher than the conventional growth rate. When we had about 7-8% annual growth in Islamic banking and finance, in conventional financial services industry, the growth was about 2%. Okay, and after COVID, the growth story has returned, or the high growth story has come back to Islamic banking and finance. So this is actually a very interesting story. Those who are looking for business opportunities, Islamic banking and finance provides an excellent opportunity for those who are looking for expanding their businesses. So we have witnessed that then whenever there is higher growth in Islamic banking and finance, innovation is expected. Now Salam Bank, congratulations, okay, you are starting your journey here. This is actually the right time. Globally, Islamic banking and finance has started to see high growth. Last year, 19.75% YOY growth in Islamic financial assets. And I can tell you that in 2023, the figure is going to be quite close to this 2008 figure, which is 28.64. So if an industry next year is going to be 1/4 of this year more, this should, the people who are looking for opportunities, they should be drooling. This is an opportunity for those who are looking for lucrative businesses. Now, I wanted to give a very short kind of keynote, because tomorrow we will have a technical session of about 2 hours, where I would be going into the technical details. So those of you who are interested, you can join us. Now, Islamic banking and finance, this 360 kind of view, Islamic banking is the most significant one. Sukuk, which is Islamic bonds, Islamic funds, takaful, and Islamic microfinance. These are the 5 segments in which Islamic banking and finance is concentrated. Of course, Islamic banking remains the most dominant segment. About 72% of global Islamic financial assets are with banks. And the remaining, probably about 28%, right? So they are in Sukuk, Islamic funds, takaful, and Islamic microfinance, and non-bank financial institutions as well. Now, what is writing on the wall? Writing on the wall is that Islamic banking and finance is going to stay. It has sustained, GFC, a lot of financial sector institutions, they were nervous. Islamic banking and finance did very well. Then COVID, this was another disruption. And of course, the whole economy, global economy stopped. Islamic banks, like their conventional counterparts, they actually did quite well during the COVID-19 period. And afterwards, now that we are experiencing high interest rate regimes around the world, bankers are very happy. Right? Now, because Islamic banking is business as usual, Islamic banks or Islamic bankers are happy as well. We have just finished this one very interesting analysis, and I would stop after that. When there is a 1% increase in interest rate, 0.26% increase in global Islamic financial assets takes place. Right? So 1% increase in interest rate, 1/4 of this 1% would be reflected in the growth of Islamic banking and finance. Many of you would say that, oh, Islamic banking and finance is interest-based. No, Islamic banking and finance is interest-free. However, this is part of the financial services industry. It is interest-linked. Right? So whenever something good happens in financial services markets, bankers, they are happy when the interest rate is going up. Of course, Islamic banks and financial institutions, through their mechanisms, they would be benefiting what is happening on the other side of the fence as well. Right? So this is business as usual. This is going to stay. And this has embedded itself in the global financial architecture. You go to IMF, you go to World Bank, you go to United Nations, you go to Asian Development Bank, you go to African Development Bank. All the multilateral institutions, they are willing to do Islamic finance, and they have capability of doing so, by the way. Okay. And when any phenomenon becomes part of the global financial architecture, then it stays. IMF has come up with this definition of systemically significant markets with respect to Islamic finance. And they have identified 16 countries in the world. And their definition says that any country where the share of Islamic banking and finance is 15% or more, that would be systemically significant market for us. And so they have suggested that their financial sector assessment program, FSAP, for those countries would include assessment of Islamic banking and finance as well. So if you go to IMF and you happen to be a country where Islamic banking and finance share is 20%, for example, Pakistan, it's about 21%. They go to IMF, that's all right. In your next FSAP, we would like to see how healthy is your Islamic banking and finance sector. So when multilateral institutions, they start looking into what is happening over there, this is going to stay. And countries like Uganda, where this is new, it could be very significant. In 2011, Oman introduced Islamic banking and finance. This was the last GCC country to allow Islamic banking and finance. Today, the share of Islamic banking is about 20%. Huge growth. So if today the share of Islamic banking in Uganda is very small, negligible, in next 10 years, this could become a very significant player if you play your cards smartly. And that would actually mean going for a collaborative regime. You have to cooperate and collaborate. You don't have to compete. The market is still very big. We have, on a global level, there is this 80% gap between the potential Islamic banking and finance and the actual one. This means, okay, even if 50% more players in the market come, there won't be any effect on competition because the market is huge. And I can see that a country like Uganda is going to benefit from Islamic banking and finance because it has actually, I don't know whether this was intentional or this was inadvertent. Salam Bank, this is a pan-African financial group. There has been some evidence that the African countries where Islamic banking and finance was set up by the foreigners, i.e. the people from outside the continent, the institutions they benefited, Islamic banks in those countries benefited, but the growth in Islamic banking and finance in those countries was not as impressive as many people would have expected. Salam Bank, it is owned by Salam African Bank, which is part of the Salam Group, and they have their business interests around the African continent, from Somalia, Somaliland, so many other things. I think this is going to be a very interesting story unfolding in Uganda when Salam Bank starts its operations fully, and there would be a lot of opportunities. The Takaful business probably is going to benefit from this one as well. When you introduce Islamic banking, the next step is to start looking into the Takaful coverage. So if you're offering Islamic auto finance, insurance should be there. So Takaful business is going to benefit from this development. So with this one, I would like to stop. And again, I would like to thank the organizers for giving me an opportunity to visit Uganda for the first time. And I hope to come back soon. Thank you.
Ladies and gentlemen, that there was a professor. So let's give hands befitting of a professor. Thank you very much, Professor. And yeah, we always told every time a professor is speaking, you can't interrupt. So he was at liberty to speak endlessly because he was spreading lots and lots of wisdom, knowledge, and beautiful insights. Thank you very much, Professor, for the insightful and delightful discussion and presentation. Thank you. And yeah, Professor just confirmed to us that there are very many opportunities in Islamic finance, and no better way to get these opportunities than through collaborations, partnerships. So let's embrace ourselves. And ladies and gentlemen, breakfast is still available. Those of us who haven't had a bite, please feel free to walk, use the exit and indulge. Then the areas of convenience or inconvenience, depending on how you're feeling, are right this end. So also feel free to visit those offices. Then a very important announcement, this one, we are having a masterclass, a very exclusive masterclass, and no other better facilitator than the professor, the profound professor. He'll be having an exclusive masterclass tomorrow, and he's getting deeper. This was a keynote address. He gave us beautiful insights. Some of the things to anticipate is breaking down all these amazing principles around structuring and the key tenets of Islamic finance product and also principles. So let's all kindly register to attend. The registration desk at the entrance is very open. So those of us who intend to be part of this masterclass, please feel free to register. It's very, very enriching and very, very insightful for you as a practitioner. Professor gave us a very global perspective. Let's now get home and bring the debate back home. Sorry about that. Yes, a professor gave us a very good global picture of Islamic financing, a very global perspective. But now we want to carry the debate home. We want to bring the debate home, and no other better person than the regulator. We need to hear from the regulator. What are they thinking? What are they cooking? You're already seeing proceeds of some of their amazing works. But we're very pleased to have someone who's also very, very instructive. She's been at the heart of Islamic finance in Uganda. And ladies and gentlemen, our next presenter is a deputy director of the on-site division of the commercial banking department. And notably, she's the head of Islamic financing project at the Bank of Uganda. She is a distinguished bank supervision professional with an extensive career spanning over 23 years at the central bank. In her role as a deputy director of the on-site division, she has been instrumental in examining and supervising commercial banks. She provides valuable guidance to banks, advising on risk management frameworks, enhancement, and she ensures compliance. And as the head of the Islamic finance project at the Bank of Uganda, she has been driving and promoting Islamic finance products. She has been very, very crucial and very, very pertinent. And she was involved in some of the amendments that we saw come to life. And ladies and gentlemen, join me in welcoming Mrs. Sophia Chironde to give us snippets of the regulator. Ms. Sophia Chironde, you're very welcome. A bigger round of applause. Ladies and gentlemen, this is the regulator. This is part of the people that say that, yeah, Islamic finance came to Uganda. Thank you.
Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, ladies and gentlemen. Every day when we worship our Lord, seeking for blessings, the world around us buzzes with the spirit of commerce and investment. But have you ever stopped and thought about how does faith and commerce infuse? How do they infuse? The eminent professor has told us that Islamic banking enables that. And today we are here to hear more about how this comes into place. Islamic banking is a topic very close to my heart. And I started my journey with Islamic banking in 2008. This was when the central bank started getting inquiries about Islamic banking. Most of the financial institutions in Uganda are affiliates, are subsidiaries of global institutions that are already offering Islamic banking in their respective jurisdictions. So they were interested. And the Bank of Uganda, with the help of the government of Uganda, the Ministry of Finance, we embarked on this journey. And the Islamic Development Bank has been very, very instrumental in helping us build capacity, providing us with all the necessary tools that we needed. My role this morning is to speak about the road that it took us to license the first Islamic bank, Salam Bank. And in my outline, I'll touch on briefly about what do we understand at the central bank. What definition of Islamic banking have we adopted? And then I'll also share some global trends to really buttress what the professor was telling us. And then I'll go into the legal framework that governs Islamic banking in Uganda. What supervisory approach do we use? And then I'll speak again about the road it took us and what is in it for Uganda. What does the prospects of Islamic banking look like? So what is it? It is banking. It is banking. The only difference is that it is hinged on 4 very important principles. The first one being prohibition of interest. You don't pay interest in Islamic banking. Yes, you don't pay interest and you're a bank. How does this even work? It works because what happens in Islamic banking, the banks will earn a return through various contracts. And we'll see that later. The other principle that underlies Islamic banking is in Islamic banking, there's no speculation. If you're involving in haram, if you're involving in gambling, casino, all those things, you cannot approach an Islamic bank. So today, we hear about ESG. ESG is taking center stage. Doesn't it show you that Islamic banking foresaw all these important concepts that are coming into play now? Because Islamic banking promotes socially responsible investments and banking. And there's a very important notion in Islamic banking, mutual risk sharing. If a bank gives you money and the project that you finance with that money does not work well or underperforms, you'll share with the bank in both the profit or the interest, or if it's a loss, you still have to share with the institution. Then there are those prohibited activities. In fact, if you think about responsible banking, ethical banking, Islamic banking is your home. Globally, what do we see? This picture here is got from the Islamic Financial Services Industry Report 2013. And the data is based on information as of December 2022. You'll see that out of the global Islamic financial services industry of 3.8 trillion, 2.25% of that is contributed by Islamic banking. So I remember the professor, I'm sure you heard him tell us that Islamic banking contributes the bulk of the Islamic financial services sector. And all the parameters, assets, financing, deposits, have shown tremendous, have shown a steep growth. And this is despite the challenging geopolitical tensions and monetary economic environments that the countries have been experiencing in the recent past. Now, that picture just shows you a snapshot of which countries offer Islamic banking and how the percentage of the contribution of Islamic banking in those countries to the entire banking industry. And as Professor said, if you look critically, not all those countries are predominantly Muslim-based countries. There are many secular countries. Some are closer to home, like our neighbors in Tanzania, in Kenya, are already offering Islamic banking. I cannot wait for a time when Uganda is appearing on this chart. So, in terms of legal framework, how did we go about this? As I said earlier, it all started by inquiries, engagements with the different stakeholders. And for us at Bank of Uganda, it started as an internal project where we made inquiries, capacity building, benchmarking with the different jurisdictions. That was in 2018. And working with the government of Uganda, the Ministry of Finance, we came up with amendments to the Financial Institutions Act. I'll talk about the key amendments that are at the heart of Islamic banking. If those amendments had not been passed, we wouldn't be talking about Islamic banking today. And I really would like, on behalf of Bank of Uganda, to appreciate the government of Uganda for working with us to drive those amendments. And in 2018, the Bank of Uganda, again with the help of the different stakeholders, issued the Financial Institutions Islamic Banking Regulations. And what that did, it provided an enabling legal framework. And recently in 2013, there were amendments in the Financial Institutions Act, as you had the Honorable Minister in her keynote. She mentioned that there were some amendments that were recently made in 2013. Some of those were to the Financial Institutions Act, and others were to the tax regime. Why were the amendments to the tax regime very crucial? You will see later that in the process of developing or structuring Islamic banking contracts, there is a risk that different tax points are generated. Now, the tax regime, as it were, presented a challenge of double taxation to Islamic financial institutions. And the recent amendments to the tax regime have removed all those impediments. And we feel that that is a very, very big milestone for the Islamic banking sector in this country. I say that I speak about the key amendments that were made to the Financial Institutions Act. The first one, the conventional banks are prohibited from engagement in trade and commerce. And yet, trade and commerce is at the heart of Islamic banking. So there was no way Islamic banking would have made it with that kind of provision in the banking law. And Section 37 of the Financial Institutions Act was hence amended to make it possible for Islamic financial institutions to engage in trade and commerce in the process of offering this new banking model. The next section that amendment that was there are so many hybrids or contracts that are formulated based on those broad contracts. The first one being Mosharaka. Yeah, I think the professor talked about it. Okay, it hasn't responded yet. We'll continue. Mosharaka is really a partnership contract. Yeah, I approach my bank for financing, but then we become partners. The projects will be financed, and at the end of the day, we'll share in the proceeds. The other contract is Modaraba. Modaraba is sometimes called partner will be the financial institution. How? Because it gives you the money. For you apply your expertise and invest the money, and then you'll share in the profits at the end of the contract. The other contract that we envisage in the legislation is Ijara, which is really lease-based. It's akin to the conventional banking leases. Let's check whether we are back. Okay, not. And the fourth contract that we envisaged in the legislation is Murabaha, where it's really buy low, sell high. The bank will buy a car, sell it back to you. That is if you approach the bank with the intent of buying a car. The bank will not give you money because in Islamic banking, money alone is not regarded as a good on which you will add interest and all those things. It is a medium of exchange. Yeah. So you notice that in my explanation of these 4 contracts, there's always an economic activity, a real economic activity embedded or underlying the transactions. So that is on the financing side. And when it comes to deposits, it's mainly 3 types, which we envisaged in the legislation. The first one being non-interest bearing account. This is akin to our normal current accounts. And when I look around the room, I want to believe that most of us have operated current accounts in our conventional banks. So in Islamic banking, there will be an account which behaves like that current account. And the second one is a profit earning investment account. That is akin to a savings account in the conventional banks. So you give your money to the bank has the liberty to invest it, but at the end of the day, you earn a profit. And the last one is the profit sharing investment account. Again, that is akin to a fixed deposit account. Yeah? So you get your money, you want to fix it in an institution. For an Islamic bank, you will operate it as an investment account. So what is the other key requirement in the legislation for Islamic banks? I talked about Sharia advisory boards. It has to have a minimum of 3 members, 3 Sharia scholars, and these must be reporting to the governance board of the institution, and they will be approved by the central bank. Why is it important? Why is it important? Because governance is very, very crucial in a financial institution. We know that in the past, we've had banking crises because of poor governance. And in Islamic banking, if a financial contract is deemed non-compliant, the repercussions are dire because a financial institution can even forfeit all the profit generated from a contract once it is deemed non-compliant. And that is why it is very important. The role of the Sharia advisory boards in the commercial banks is very, very important. What happened when it came to Salam Bank? Remember, by the time we got an application for Salam Bank, there was already a level playing field. The legislation was in place. And all the licensing requirements are well laid out. So the bank approached Bank of Uganda with their application, and Bank of Uganda has a role to review all the submissions, to review the strategic plan. In Islamic banking, it's not the moment you position yourself as an Islamic bank, everything, all your strategic plan, your business plan, your work plans, your projections, the product outline, everything, policies and procedures must speak to that. So Bank of Uganda had the duty to ensure that this bank submission is compliant. Otherwise, if due diligence is not watertight at that stage, remember this is our pioneer Islamic bank. We just couldn't afford to make any mistake with it. And I'm glad that as we are standing here today, we have Salam Bank, the pioneer Islamic bank. And I'm very lucky this morning that I'm seated next to the finance manager of Salam Bank. I want to touch on the issue of capital, because before a license is issued, these institutions are required to provide the required capital. But why is it important? Bank of Uganda has recently increased the minimum capital requirements, and the reasons were many, but I'll touch on one. The main objective was to enhance the resilience of our financial institutions. Remember, I said that Islamic banking is here, and we have to ensure that there is a level playing field. You don't want a situation where this new banking model, which we have waited for since 2008, is labeled either underperforming or is not resilient to shocks. So that is why, even for an Islamic bank, it's very, very important that it meets the minimum capital requirements, both at the inception and on an ongoing basis. And we have the supervision, the risk-based supervision to ensure that that is achieved. I think I've touched on that already. I now want to spend some few minutes talking about what is in it for Islamic banking. As Bank of Uganda, what do we feel the country is going to benefit? The first one is financial inclusion. I know of many people who are not part of the formal banking because of their religious faith. They do not want to associate, they don't want to hear, they don't want to think about anything called riba. Now, with Islamic banking, we are very certain that these people will be included in the formal financial system. The notion of risk sharing, this promotes equitable distribution of risk. And if you come to think of it, if you knew that any inadequate due diligence or any negligence on your part or any poor performance on a project is going to result into losses which you will have to share with your institution, what will you do in terms of risk management? I think you will have to step it up. And that actually is true even for the financial institution. In Islamic banking, before a bank gives you a facility, financing, before you append your signature, the banker has a duty to sit down with you and explain to you the nitty-gritty of this contract. There cannot be any hidden terms and conditions. At the onset, you have to know what this whole contract is all about. And in doing that, it enhances risk management across the board. And we believe as a central bank that this is very, very good for financial stability. Banking in this country and in other countries, especially in African continent, is very, very expensive. That is mainly because of interest. There's interest, there's compounding of interest, then interest on interest. But because Islamic banking prohibits interest, it makes it very, very affordable. Remember, at the onset, before you sign a contract, you know how much you'll pay to your banker. So this idea of compounding interest makes the whole banking very, very expensive. And we feel that this is a gap that Islamic banking has come to close. And then thinking of ethical investment and financing, prohibition of gambling, casinos, all those socially unacceptable activities. I feel that it's good for the society. It's good for society. Today we talk about ESG, but why should we be talking about it today in 2013? This is what I was saying earlier. Islamic banking foresaw all this. Yeah. So we feel that it's going to be a good contribution to the ESG agenda of the country. And Islamic banking, you cannot get money from the bank without an underlying economic activity. If you come to think of it, today in conventional banking, customers divert money, you're given money to invest in a farm, you convert it to go and marry a wife, or you go and go for holiday. There's no way of tracking that. In Islamic banking, that is not possible. And we feel that because of the underlying economic activities that are embedded in this model, that will contribute to economic growth. And then there's this notion of zakat. We have NGOs, we have other underprivileged societies. Because Islamic banking promotes this, supports this socio-economic development agenda, we feel that that will be a good contribution in uplifting the livelihoods of the communities that we serve. And through Islamic banking, the 4 contracts, for example, that are highlighted under financing are just a very broad, it's a broad outline. But I'm sure in the masterclass, as we have had, the professor will tell us how many other hybrids, if I can use that word, or subcontracts that can be structured arising from those 4 broad. So because of that, there's going to be diversification. It will provide options to the customers. And then, of course, foreign direct investment. Uganda has been home to investment before, but we do believe that Islamic banking provides another opportunity for us to tap into the FDIs. Before I conclude, I would like to say that as Bank of Uganda, this only started as an inquiry from 1, 2, 3 institutions. When we conducted our survey, we confirmed that there is demand for Islamic banking. The benefits are real. Professor told us Islamic banking is business as usual. And I want to call upon investors out there. I want to call upon conventional banks. I want to call upon everyone who feels that there is need for ethical banking to infuse finance with commerce to embrace Islamic banking. Because there is nothing so unique about it. It's just that it's a type of banking that is ethical and promotes responsible financing. There are those acknowledgements because on this journey, we couldn't have done it alone. I think I missed the government of Uganda on that slide. My namesake, Sophia, will help me to include that before we leave. But all those people have been very instrumental in the Islamic banking journey. I would like to thank you for listening to me, and please, I apologize for the operational glitch that we experienced. I thank you.
Thank you very much, Sophie. Ladies and gentlemen, Sophie deserves a bigger round of applause. Yeah. We all agree that was a very passionate presentation. She has demonstrated the preparedness of the central bank, the commitment of the central bank. Yeah, and she has proved to us that the various opportunities in there. And I think if I look in the crowd, very many of our attendees are from financial institutions. Either you work there or you advise them. So you can see what the regulator is thinking, how prepared they are. So the ball is in your hands. Prepare as well. And thank you very much. And the regulator paints a very bright future for Islamic finance in Uganda. So thank you very much, Sophie. That was a very, very wonderful presentation. So ladies and gentlemen, still from a regulatory perspective, we've had the regulator dwell into how ready they are, the journey they've taken, yeah, and the future is equally bright. Let's try to still keep the discussion home, but let's now listen in from the tax policy and the general policy makers in the country, notably the Ministry of Finance. This is a very crucial institution in formulating government policy, tax policies, and all that. And it's very, very imperative for us to pay regard to what the Ministry of Finance is thinking, how prepared they are, and what the experiences around Islamic finance in Uganda are. And in our midst, we're very honored to have Mr. Bob Bonabo Unebe. Mr. Bob is a profound economist, and he currently works as a principal economist at the Ministry of Finance, where he's worked from 2009 to date. And notably, Bob also is a non-executive director to Uganda Development Bank. And Bob has been very instrumental in Islamic finance in Uganda as well. And ladies and gentlemen, still from the Ministry of Finance, we have Mr. Tugume as well. Mr. Musa Lukwago, who is also a principal economist at the Ministry of Finance. Yeah, he's also in attendance. And Mr. Bob, I kindly invite you to share your address with the audience. Ladies and gentlemen, let's welcome Bob. Let's give him a very big round of applause. Thank you very much.
Good morning. The Honorable Dr. Saida Bumba, distinguished guests, good morning. Like we said, my name is Mnene Bob. Well, like the earlier speakers had said, Islamic banking is not all about Muslims. I've been a focal person for Islamic banking in Ministry of Finance. The regulations, I was part of them. So that confirms that Islamic banking or Islamic finance is universal. I'm here to represent my director, Moses Kagwa, who was not able to come, but I will read his mind verbatim. Good morning, all. I would like to thank the organizers, BDO, MESA, and the Signam advocates for inviting Minister of Finance to speak today. I'm glad that we are here because Islamic finance is central to this government's development agenda. Islamic finance, when properly rooted in principles that emphasize ethical and responsible finance practices, has the potential to contribute to our national growth and financial inclusivity. In regard to what we are called to discuss, what is the future of Uganda in regard to Islamic finance, I would like to use this opportunity to discuss the interaction between Islamic finance and economic policy and outline what it means for the future of Ugandan economy. Globally, like the professor had said, the value of Islamic finance now reaches $3.8 trillion, and it is anticipated by 2025 to reach $5 trillion, fueled by the capital inflows into the Islamic exchange traded finance. However, the Islamic finance industry in Africa remains largely untapped, operating far below its potential, despite the concerted efforts of colleagues from across various African economies to enhance this form of financing. In 2016, the IMF found that African countries accounted for only 1% of global Islamic finance assets. This statistics is lamentable, but it presents a golden opportunity for Uganda to reap the benefits from this yet unrealized source of growth. In Uganda, Islamic finance has been gradually gaining recognition and acceptance as a viable alternative to conventional finance. The notable development in the sector include the Financial Institutions Islamic Banking Regulations of 2018, issuance of the first Islamic banking license to Salam Bank Limited, Islamic microfinance that is being championed by Microfinance Support Center, Islamic insurance, among others. Notably, through the National Development Agenda, we are witnessing a deliberate evolution as a country works towards developing a sustainable private sector-led economy. Investments to support the private sector are being rolled out, the benefits of which felt for generations to come. This is a long-term development blueprint that aims to create a transformed society from a peasant to a modern economy within 30 years. The blueprint for development is centered around strengthening the fundamentals of the economy to harness the abundant opportunities such as oil and gas, tourism, minerals, our abundant labor force, among others. The government has a strategy to capitalize on these opportunities and transform the economy. One key pillar of this strategy is the promotion of inclusive financial sector with appropriate legal and regulatory framework in place. With Islamic finance, this has a vital role to play. One of the Islamic finance central features is inclusiveness, since it's not for Muslims, but rather a wide mode of financing development. This harmonizes well with our development agenda of inclusive and sustainable growth for projects, but it also has an inherent principle that catalyzes real economic development through its ethical, sustainable, and environmentally responsible approach that promotes risk sharing. Islamic finance connects the financial sector with the real economy. It places a strong emphasis on inclusivity, social welfare in the economy by investing in long-term and tangible projects like roads, water, electricity, and provision of sanitation facilities, among others. While Islamic finance is new in Uganda, financial services systems are confident in its ability to help us to achieve Vision 2024. How Islamic finance can promote real economic development. We've identified key 4 principles that Islamic finance can contribute to the real economic development. 1, financial inclusion. The Islamic finance offers an inclusive model of banking that caters for broader segment of the population, including those who may have been excluded from the conventional financial systems. Several Islamic banking institutions are now operating in Uganda, including Salam, and these offer a range of Sharia-compliant financial products and services. These institutions will help diversify the financial landscape and increase the choice for customers. Islamic finance can also foster inclusive capital markets. It will provide additional finance products to customers who are already accessing conventional finance services, and this will accelerate the mobilization of domestic savings, which can be used for investment in other development sectors. It can also help to reach credit-constrained and undeserved sections of the populations. Islamic finance also will encourage alternative sources of long-term finance. It offers a wealth of opportunities for our companies and government to develop national infrastructure. Raising long-term finance is often a key challenge to the success of these projects. Islamic finance instruments such as Sukuk offer an alternative solution that will provide a long-term source of finance that are tied to tangible assets like roads. You know, our standard gauge rail has not taken off because of lack of funds. Probably this can be a lifesaver. Also, Islamic finance would attract investment flows through foreign direct investment and development, overseas partnerships. A regulated financial framework will not only support investment flows from overseas through domestic, but also boost the investor protection and confidence. The government has worked to create conducive environment so that the 4 opportunities that mentioned above can be realized. More specifically, we have included an amendment of relevant acts to provide the issuance of Sukuk, Sharia compliance products, taxation regimes, so that we have a parity regime. The benefits of these are already being felt through the issuance of the first license of a bank, namely Salam Bank. With the legal and regulatory framework in place, it's time to fully operationalize Islamic finance to support economic growth. As government, we look forward to work with all of you to help Islamic finance reach its full potential in Uganda. I want to thank you, and may Allah bless you all. Thank you.
Thank you very much, Bob. Ladies and gentlemen, another round of applause to Mr. Bob. Thank you very much, Bob. It was also imperative and good of us to get snippets into the Ministry of Finance and the policymakers what the thoughts and directions are. Thank you very much, Bob. Dear online audience, we still take note of your presence. Still very honored with your presence, and we notice how active you are. Keep generating the questions. We shall have a Q&A segment, and all these questions will be presented to our panelists and speakers, and they'll definitely afford you the responses. Then we believe it's a very exciting morning so far. We've been very pleased to have presentations from the professor, the guest of honor, the regulator, the Bank of Uganda, the Minister of Finance, and all these have set the ball rolling. The momentum for the symposium has been set, and no better way to drive us into our next segments, where we shall be breaking away to listen to people who have been very active, the clients and the like in this sector. But before we do that, we have a very important ceremony to carry out. Ladies and gentlemen, this conference has also birthed a very brilliant idea. The 3 firms that are partnering, BDO, Signam, and Mesa Advocates, have still birthed a new project, the Islamic Finance Hub. This will be a training center for all of us who want to get well acquainted with aspects and principles around Islamic finance, structuring, and the like. And since we still have all our guests and panelists, I'm very pleased to invite Ian. Ian Mutiva is the CEO of the Hub. Ian, if you could just come and speak to us very briefly about the Hub, then we shall have the Hub launched this very morning. And also, we have very, very, very beautiful gifts that we shall be giving to our panelists. But also, our professor is a very kind one. You know, when you're traveling from the UK and abroad, you don't just come barehanded. Professor came with very many gifts, a copy of which is here. And he has given me the liberty to give it out to any of us. Yeah? So I'll take this to any of us who's been very active, whether online or present. So if you've been very active, we're taking notes, and Professor has a very good gift for you. It's a journal in Islamic financing, and no better way than have it autographed by the professor himself. He's still around. But also, allow me just to reemphasize the masterclass. Our exclusive masterclass on structuring of Islamic finance products is happening tomorrow. We're very happy to host you at the BDO offices. So please carry on your registration. Our registration desk at the entrance is up and running. Our colleagues who are online, please drop a comment or drop raise your hand. Our team is very happy to support you. So ladies and gentlemen, please join me in welcoming Ian Mutivwa, the CEO of the Hub, just to give us thoughts around the Hub, then invite the other members. Thank you.
Thank you very much, Edwin. Our guest of honor, we're very honored to have you still. The Hub is a concept for training, one, on structuring Islamic finance, but two, providing knowledge around Islamic finance. Our first class is tomorrow, the master class, and the professor has given us time to get into the detail on how to structure Islamic finance products. As Edwin has said, the registration desk is at the back, those who are interested in the class tomorrow. But effective January of 2024, we shall be rolling out a detailed program of the Hub, of the trainings, of the trainers. We have a myriad of experienced team from here and abroad to come and give you specialized training on how to structure Islamic finance product. As the CE of the Islamic finance, I'm delighted to invite my deputy, Sophie, to do a special ceremony, and Mr. Makanga, one of the directors, please, you also, you're invited, and John Jett, to do just a special ceremony. We have a couple of thank you tokens to our speakers who have just finished, John Jett and Mr. Makanga. The first one goes to Honorable Dr. Saida Bumba. It's a small token of appreciation from us to you. Say thank you very much for being part of the inaugural Islamic Finance Conference. Yes, but I think we should come up so that we can have a photo op. The stairs, okay. Maybe deputy can. John Jett and thank you. I think it's up there. Thank you. Yes, the second person is Professor Da. Prof, thank you very much for making the time to come from the UK, for giving us the masterclass training, and for being a part of the Hub. He has so much in store for Uganda. This is his first time in Uganda, by the way. Thank you, Professor. The third one is to the Bank of Uganda, Ms. Sophia. Ms. Sophia, thank you very much for allowing to be part of this conference. Give a regulatory aspects of it. The last one in absentia is to the Ministry of Finance. And I think, Bob, you can receive it on behalf of Mr. Moses Kagwa, who couldn't be here, to say thank you for being part of this inaugural Islamic Finance Conference. Ladies and gentlemen, I have the singular honor still of launching the Islamic Finance Hub. And I would like the guest of honor, again, just at the end there, there's our launch table to launch the Islamic Finance Hub. I'd like the Minister of, for the Ministry of Finance and Bank of Uganda to join us as well. No, at the end? No. Yes, at the end? No. My team, please, at the end there, to launch the Islamic Finance Hub. This is going to be a learning center, a wholesome learning experience to ensure that the people in Uganda, first of all, understand Islamic finance, but two, learn tax, accounting, structuring, lending, enforcement of Islamic finance products in Uganda. This is a first of its kind, and we're happy to have the inaugural class tomorrow from Professor Da. I will also take a step there, and then we shall launch the hub. Yes, Honorable Minister, we give you the singular privilege of launching the first ever hub in Uganda to train on Islamic finance.
On behalf of all of you present here, it's my honor and pleasure to declare this important hub opened today. I take this opportunity to congratulate MESA, BDO, and Signa, who have come up in partnership. You are implementing one of the important principles of Islamic finance or partnership. We look forward to successful use of this hub. Thank you.
Thank you very much. I hand over to the MC. Thank you.
Thank you very much, Ian. Ladies and gentlemen, as the esteemed gentlemen and ladies make their way, please give them another round of applause. Thank you very much, Ian. And as you'll agree, the marriage between BDO, MESA, and Signam is a very humbling one. We're seeing proceeds of the marriage, so let's keep building such synergies and collaborations. Thank you very much, Ian. But ladies and gentlemen, importantly, the hub is for you and I, it's for all of us. An opportunity to share thoughts, share experiences, but also a very singular opportunity to get trained by industry's bestest, yeah? Internationally, locally. So it's a very humble call to all of us to partake of the same. We kick off tomorrow, and suddenly we're very, very excited to host you and keep making this better. Ladies and gentlemen, our conference is fast up and running. We're still coming to you very live. We're streaming on our YouTube channel. The hashtag is still up and running, Islamic Finance Conference 2023. Let's carry on the debate. Let's generate the debate. Our thoughts, our questions. Let's keep trickling in. Our online audience, we can't emphasize how much we're very honored with your presence. And ladies and gentlemen, we now try to shift the debate. Yeah, we've been very graced with esteemed speakers, but now I want to spread out the discussion. We're going to have two panel discussions, and these panels are comprised of very distinguished ladies and gentlemen as well. We have people who from investors, we have practitioners, we have local and international panelists as well. And these two panels will be moderated by two very esteemed practitioners as well. The very first panel is panel A, and panel A will be speaking to us around the details of Islamic finance banking, yeah? Customer bank relations, financing contracts, structuring of products, taking securities, enforcement, taxation, and accounting, and any other opportunities. And this panel is going to be moderated by a very profound practitioner. She's very, very passionate about Islamic finance. Yeah, she's been at the heart of Islamic finance. We all saw her involvement, her very active involvement in Salam Bank. She advised at the bank. And ladies and gentlemen, she is a partner at MESA Advocates, where she heads the commercial projects and alternative practice. She has over 9 years experience in Islamic finance. She holds a Bachelor of Laws degree. She holds an MBA with a finance specification from. Ladies and gentlemen, she also holds an executive diploma in Islamic finance from the London School of Business and Social Sciences. And she's a Cambridge Islamic finance structuring master. Ladies and gentlemen, she's been very practical and very enthusiastic about Islamic finance. And we all agree, yeah, she's the future of Islamic finance in Uganda. Ladies and gentlemen, my singular honor to invite the amazing Sophia Chigozi. She'll be moderating our very first panel. Sophia, you may take it.
Thank you very much, Edwin. Ladies and gentlemen, join me in welcoming the amazing panel that is going to be answering very interesting questions about Islamic finance. On the panel, we have Mr. Michael Mande. Michael Mande is a Ugandan national, currently holds the position of MD or CEO at Salam Bank. His leadership at the bank achieved a significant milestone in September 2023 by obtaining the first banking Islamic finance license from the Bank of Uganda. His career spans 13 years in the financial sector. Mr. Michael has a very long bio that if I exhaustively went through it, would take the entire time at the panel. Mr. Michael, please take your seat. Mr. Ian Mutibwa, the CE of the Islamic Finance Hub. Please, let us clap for Ian Mutibwa. Ian Mutibwa is also the managing partner at Signam Advocates, and he heads the tax, banking, finance, including Islamic finance and corporate governance teams at Signam. He has 10 years practice and experience, and in 2016, he was seconded to the global law firm of Latham and Watkins LLP in the UK in the International Tax and Project Finance departments, with a special emphasis to the African markets. He has twice been nominated for the Award of Partner of the Year at the Africa Legal Awards in 2020 and 2021, and he was recently recognized amongst the 75 highly regarded business lawyers in Uganda. Ian Mutibwa is one of our panelists today. We have a lady, Helen Nachiriowa. She is a partner with Shonobu Musoke and Company Advocates, practices in the banking and finance space, and specializes in the project finance, asset finance, commodity finance, syndicated lending, and advisory on financial services regulation. She has received recognition as the leading lawyer in her area of practice by ILFA 1000 and the Legal 500. Helen has experience advising local, regional, international lenders, including commercial lenders and development finance. Helen holds a Bachelor of Laws from Makerere University, a Master of Laws in International Banking and Finance from the University of Leeds, and has received special training in different financing aspects, including Islamic finance. We are so pleased to have you, Helen. Mr. John Jett. John Jett is a partner at BDO, and he heads the tax, and he's a tax director at the same firm. He heads the tax auditing and business segments of BDO. We're happy to have you, Mr. John Jett. We have Nicholas Mushaventa, who is also an audit partner, BDO. Please join the panel. And lastly, we have Samuel Timothy, who is the manager, business policy, domestic taxes department, URA. You'll apologize that I'll not go into the in-depth of the rest of the panels because we have 30 minutes. And I am ready to start. My first question goes to Mr. Michael Mande. Mr. Michael Mande, the business of banks is to sell debt. Conventional banks and Islamic banks alike. Walk us through how different the Islamic finance structure, offerings, as well as products foster economic and social justice.
Thank you very much, Sophie. A very good morning to everyone here. So I'll go right to the question that you asked, how Islamic banking fosters economic and social justice. So my previous speakers have made very profound statements. If you look at this country from a population perspective, the records show that about 15 or so % of the population is of the Muslim community. So when you strictly go by faith, let's say, it means about 7 million people say would be excluded from financing. That's if we are to go by that KPI. So Islamic financing, I know indeed that most of our brothers and sisters, of course, they have accounts in all the rest of the institutions, but they have been unable to get financing or to do certain kinds of businesses because they are restricted, riba. So Islamic financing comes to address this very, very easily. For us, in this case, we include all these businesses, individuals, to ensure that they are able to expand, their offerings. They're able to grow, increase employment to the Ugandan communities. So we invest in these businesses in a very Sharia compliant manner. As you are aware that some of the modalities of Islamic banking include risk-based funding. So when a business comes to us or an individual comes to get financing from an institution like Salam Bank, we look at, of course, we do an assessment of the business. We come to a conversation, agree on return ratios of sharing return in the beginning when we are having the conversation, so that when the business starts to generate revenue, from the onset, we both know, as the party, the borrower on the other side, and the institution, that the returns generated by the business will be shared in a certain ratio, say maybe 60-40, whichever it is that agreed. So we deploy the capital, expand the business, run the business, the borrower runs the business, and then we share return at the end of the cycle, the financial cycle of the business. So the model Islamic financing emphasizes risk participation in the business. We don't just deploy capital and then we are out of it. We are interested in seeing what the capital is going to do. We support the business to ensure that it succeeds, and then at the end of the day, the return is shared in the agreed ratio from the beginning. And in situations where, of course, Islamic banking is also very big on charity, as you know, for purposes of social and for social justice. We are big on charity, through zakat, sadaq arrangements. You might have seen a couple of entities which practice charity activities. We are doing a lot of partnerships with them to ensure that we expand the services that they offer. So it's really broad. I will in the meantime leave it at this, but this is partly what Islamic financial institutions do to ensure that there is social justice in the economy. Thank you.
Okay, thank you very much, Mr. Mande. I'll go to the lady. Helen. Helen, in Islamic banking, the contracts are simple, but not so straightforward. What is your experience with structuring financing contracts for clients and taking of securities under Islamic banking and finance?
Thank you, Sophie, and good morning to everyone. I'm happy to be here at the inaugural Islamic Finance Conference. I think in terms of the structuring of Islamic contracts, the experience I've had in the market so far has been with foreign law-governed contracts. Obviously, before we had Salam coming in, most of the financing was coming from UK mainly. We had a few from UAE and even less Sri Lanka, I think, here and there. So that was the first thing in terms of structuring. You have a foreign governed document. Now, foreign governed documents to local borrowers, there's an issue of understanding, right? And also Sharia compliant financing being equally a new area within Uganda, there is an issue of appreciation of the principles, right? For people who are Muslims, I guess it's easier if you're borrowing and they're telling you about Sharia. It's things that resonate with you. But for the lenders, for the borrowers who are not, I think in terms of the experience I've had is the struggle to negotiate and understand the different principles and processes that are embedded in these products. So I'm very glad to see that the hub has been put in place, and I think it's something we all need, not just practitioners, but the borrowers themselves, as well as the new market entrants who are practicing in Islamic finance. In terms of security, so I think there's also this notion that because it's Sharia, security is not taken. But as the professor told us, it's business as usual. So we've seen the normal securities that you'll take in the conventional banking space, whether it's debentures, guarantees, mortgages. We've seen them under the Islamic best lending. I think what's crucial is to try and understand what Sharia principles would impact those securities. For example, if I can think of a debenture and having a floating charge. I'm sorry for people who are not lawyers, but so the floating charge is a security that's taken over goods which are mainly futuristic. So some people who are Sharia scholars may argue that that's uncertainty. So I think from a legal perspective, those are the kinds of things that we have seen in the market, and just trying to understand what Sharia is and how it kind of comes down to our local products that we use on a day-to-day basis.
Okay, thank you very much, Helen, for sharing your experience with us. But while at it, what modes of recovery are available to financiers and lenders under Islamic finance?
So the modes of recovery, again, business as usual, would be the same. But obviously you'd have to take it in the particular product that you have. For example, someone who has the lease, the ijara, right, can take repossession because in fact they are the owner of the goods. So there's repossession, there is sale, there is legal action. So the modes of recovery do not differ much from the conventional ones. I think it's the principles behind the recovery. I think many people say when it's Sharia, I think you're looking more at resolution than recovery, right? To try and find a mutually agreeable mode of everyone having a win-win situation. Yeah.
Okay, thank you very much. We are now going to speak some tax and audit and accounting. So I'll start with Mr. Amel Samuel Timothy, the acting manager, business policy. And my first question is that the laws were amended this year to provide for the tax treatment of Islamic financial business and takaful business. What is expected of such businesses for tax compliance purposes.
Thank you, Sophie. Maybe, excuse me. I need to clarify that yes, there was an amendment in the law, but as the different speakers have been advising, it's the laws were just amended to clarify certain aspects in Sharia, and one of the aspects was that they wanted to create parity that with the conventional banking. So the aspects that were amended were to provide for the specific transactions that are involved in the Sharia. For example, when you look at there was okay, I may not speak the Islamic language, but I know the concept. There was the sale-based contracts where you have the bank acquiring the asset in its names, and then it sells it to the customer for a cost plus. Now, under such circumstances, you'd find that for stamp duty purposes, there would be double taxation when these transfers are being made. So the Stamp Duty Act was amended to ensure that these transactions, there is nil duty to facilitate the growth of the Sharia. And so for such a transaction, of course it's important for records when it comes to tax purposes, because we need to determine whether the right taxes were paid. And as such, it's important that you have records that one, the product meets, has been certified, and then that you have proper records to support the transactions, that when we are reviewing your transactions, we are able to actually determine that the right taxes were paid. And then also on, so we've made some changes to our processes to provide for these unique products that were already not there, because some are already covered by the existing legislation and also the existing processes that we have, but others were not covered, and so it is for those ones that were not covered that we made some changes, and that is like now for the Takaful premium, we've provided for it in the returns. So when you're paying that premium, you'd have to withhold the 10%, since it's similar to the insurance premiums. And then also for the agency fees that are paid under the Sharia transactions, we've also amended our provisions to provide for such fees. Thank you very much.
Thank you very much, Mr. Amel. But allow me to stick around with you a little bit. The Islamic finance products are structured differently and quite uniquely compared to conventional financial instruments. URA, and specifically the commissioner, has been given powers under the amendments to recharacterize transactions for Islamic finance purposes. How prepared is the Uganda Revenue Authority to implement these new tax laws and powers that have been given to the commissioner? Has there been enough sensitization for URA staff to understand these Islamic finance products? Is there a special URA team that taxpayers can engage for clarification on the new tax laws for Islamic finance?
Thank you very much, Sophie, for that question. Maybe I need to clarify that URA has been part of the journey in developing this product. from, of course, the discussions that took place at the Ministry of Finance when it came to coming up with the regulations, the amendments. URA has been part of this journey, and our staff have been advising on this, and as such, yes, we do have, we've been part of this, and as such, our staff have the knowledge. And then also we have a unit that handles the banking sector, and so they've also been part of this journey. And then the office that the section that I run is in charge of guiding staff and taxpayers in case they have any technical questions when it comes to tax matters. And so if you have any questions that you need addressed by the commissioner, you can always write to the commissioner, but then it comes to the business policy division, and then we respond to them. In case you have any issues, maybe with the way URA is interpreting certain provisions of the law, you can also write to us, and then we shall be able to guide you on whether your transaction is in line with what the law provides.
Thank you very much. Thank you for offering that guidance for those of us that are attending online and elsewhere. The Uganda Revenue Authority does have capacity to advise on the recharacterization of transactions and deeming them as Islamic financial business. So I'll move to Mr. John Jett to survey. Mr. John Jett is the Director, BDO. Mr. John Jett, please provide an overview of the tax treatment of Islamic financial business in Uganda.
Thank you very much, Sophie. When it comes to taxation of Islamic finance products in Uganda, as Samuel mentioned, effective 1st July 2023, the tax laws were amended to provide for how Islamic finance products are treated. And prior to the coming into force of these laws, there was uncertainty as to how these products should be treated. And one of the canons of tax principles is you need to create certainty for businesses or for investors to know the outcome when they trade in a certain product, and that was missing. And we are happy that with the current laws now, that has been addressed. The other was neutrality. When you look at the way Islamic finance products are structured or designed, the contracts, they go through various ways, as we shall see in some of the examples, or tomorrow, those who will attend the masterclass. The unique nature was creating a problem of creating several tax points for an economically similar product for conventional banking, and the new laws create harmony in how the Islamic finance products. And when you look at all the tax laws that have been amended, that is Income Tax, VAT Act, Stamp Duty Act, Excise Duty Act, all those, they have one principle, or when you look at the memorandum or the objective of the amendment is to create harmonization of the taxation of Islamic financing products with conventional banking. In other words, the tax changes that have been introduced, they are not creating a special treatment for Islamic finance products. No, they are just creating a level playing field such that if you have an economically equivalent Islamic finance product, which economically in substance is similar to what a conventional banking product is, they should be given the same tax treatment. And that is very critical for business. And if I can give you some examples, with taxation, you don't just tax anything. You tax a transaction, and that transaction has to be specifically provided for in the law that it is taxable and how it is taxed. And also you tax income. If income has been earned, that's when you tax it. But when it comes to income tax is based on the character of the income. So the characterization or the classification of the income stream you're talking about determines how it is taxed. If you're talking about profit is taxed differently from a dividend or from interest income. So the Income Tax Act has been amended to ensure that when you're looking at an Islamic finance product, the classification of the income stream that the financial institution is earning, or the expense that the borrower is incurring in the process of borrowing through Islamic financing, the tax treatment has been clarified such that if you are a bank, for example, you've given an Islamic finance product which ensures that, for example, it is a profit sharing, like Dr. Said Honorable mentioned, that if the Islamic financing is encouraging profit sharing as a principle, so the bank will share into the profit. In the books of the bank, it will say that I've earned income, right? But that profit it has earned, when the borrower is paying the bank under conventional banking, the borrower is not required to withhold tax when they are paying interest to the bank. The bank will pay its corporation tax to URA on that income. So in the current law now, it has been clarified that when the bank is getting a share of profit from the borrower, there will be no withholding. The bank will just declare that profit to URA and pay its corporation tax. I don't know whether I need more examples.
Would love more examples, but we are pressed for time. Please come join us at the masterclass tomorrow. Mr. John Jett will be able to share a lot about the tax treatment of Islamic financial business. Thank you. Thank you, John. I'll go to Mr. Moshabenta Nicholas, an audit partner at BDO. Please give the difference between Islamic financial products and conventional financial products. Accounting treatment may be different as well. What do we need to know?
Thank you for that question. I can see you're focusing much on the key differences in accounting of Islamic banking and at the same time the conventional banking. I would need, I think, to start from giving the perspective of from the Ugandan jurisdiction, what is expected as Islamic banking institutions and the other conventional banks which are going to be licensed under an Islamic window. That in Uganda, we have the Institute of Certified Public Accountants of Uganda that is mandated to adopt or issue specific accounting guidelines for every entity in Uganda for which they're supposed to apply the relevant accounting standards. Upon the amendments in the Act to allow the Islamic banking, the Institute issued guidelines confirming the expected applicable accounting standards for all Islamic financial institutions and any other institution that is actually going to be offering Islamic banking products. The confirmation was clear that such institutions are expected to comply with international financial reporting standards, and more specific that such institutions are not expected, given the fact that there are those that are likely to adopt other reporting frameworks or accounting standard other than the international financial reporting standards, like those for small and medium enterprises. So if it's just a small or a small medium entity that actually has applied to BOU for license, also for specific Islamic financial institutions, here the clear guidance is the first applicable accounting standard that is expected to be complied with is the full IFRSs. In the same guidance, of course, in line with the amendments and the regulation that were issued by Bank of Uganda, that all financial institutions or Islamic financial institutions and any other that is going to be licensed is expected to comply with the accounting principles that are Sharia compliant. So the critical difference is that given the fact that you are expected to apply accounting standards which are in compliance with Sharia principles, the more guidance is that in case, maybe I first give still an aspect of, do we have specific independent accounting standards for Islamic financial institutions? Yes, there's an institution of accounting and auditing organization of Islamic financial institutions that issues financial accounting standards for which those relevant Islamic financial institutions are expected to apply. Maybe the issue is that in terms of its nature, it's not so broad as compared to these other international financial recognized standards. So it's important to note that for any specific accounting event, financial event, or aspect that is not covered by the financial accounting standards issued by that institution, then IFRS takes precedence. So if I go into the specifics, the differences are basically hinged on the key principles of Sharia law that are not relevant or are not clearly defined from the side of the financial reporting framework, like that aspect of IFRSs. So I will give a small highlight, then later give an example which I believe should give more insights exactly in understanding from a broader perspective what's the key differences. It starts from the philosophical foundation that, of course, from the Islamic financial institutions that apply the Sharia law compliant accounting standards, the ethics that we've talked about, which are the other attributes of like interest prohibition, the aspect of profit sharing, we talked about the zakat in terms of the charity activities like Amanda has indicated, how are they accounted for in terms of Islamic financial institutions. So the difference, because I can't go into all the details of those financial accounting standards for Islamic financial institutions, is basically to confirm that the difference only lies behind a specific financial event whose principles are actually more directed onto the side of Sharia law, maybe are contrary to the general principles in financial reporting. So I would just use like an example of a sale-based, no, I think the clear one which has already been highlighted that is likely to be one of the key products are likely to be offered, the lease-based, which is basically the ijara, that from the IFRS or the conventional perspective, the lease-based, I think you allow me, I don't go into the Sharia law perspective. I explain from where all of us, we seem to be knowing that from a lease-based perspective, now the bank is going to be the one giving in an asset, and therefore it's a lesser. The other side, on the conventional or IFRSs, they are saying that you determine the total amounts of money we call the minimum lease payments expected to be paid by the customer. Now, when you're determining the minimum lease payments, are incorporating both the amount of an asset that you're giving and the profit margin that the conventional bank is going to get, and then to recognize that balance in the books of accounts, we discount it using an interest-based interest in that is contract. Now, because from the Sharia perspective, we don't have issues of interest. you'd not expect that the lease payments that are going to be recognized by the bank are going to be discounted. So the recognition is actually that the profit margin that is going to be incorporated in the lease payments is recognized over time, over the contractual period, in form of the profit sharing that the bank is expected to earn from that specific contract. I think that should give a high-level insight.
Yes. Thank you. Thank you very much. You have given us an insight. But it definitely means that the Islamic Finance Hub is going to have a lot of work to do. So join our classes as and when we roll them out, starting tomorrow with a master class. I'll go back to Mr. Michael Mande. Mr. Michael Mande, the lawyers have spoken, the accountants have spoken, and the auditors have spoken about managing the business that you head, among other Islamic financial business. But my specific question is, I am drawing examples from successful banks and successful CEOs across Africa. When you look at the Bank Nazwa in Oman, which the professor told us about, was founded in 2011. The Javaz Bank in Nigeria, the first licensed Islamic bank in Nigeria, the Al Barak Bank as well, and the Honglink Bank, which is 99% Chinese owned. The CEOs of these banks' major strategy was to capitalize on cementing their brands. This attracted more investment from the local and foreign investors and making them very successful brands to date in Africa. What is your strategy at Salam Bank in promoting Islamic finance in Uganda?
Thank you, Sophie. Thank you once again. So Islamic banking in Uganda, as you know it, is we are starting to practice it, but the concept of Islamic banking is generally not new. It's business as usual, as the Prof indicated. So for us at Salam Bank, we, of course, as a financial institution, we are here to create ethical impact in the communities that we serve and those communities where we come from. So everything we will be doing will be strictly Sharia compliant. The financing that we will be doing will be strictly Sharia compliant, as you expect. So we certainly already are working on a lot of partnerships with like-minded entities, like-minded institutions, to see that the concept of Islamic banking is, first of all, very well understood by the population. You know, there's a misconception in the market. We've met very many businesses and people when they know, the main thing that they know is there's no interest. So the first question always, how do I get financing? Okay. The expectation is that they will come for, say, 100 million and they return 100 million. So we have to take time to sensitize the public for them to really understand that while there is we don't take or give interest, but there are compensating ways in which the business is run. Okay. So we have to take the people through, you know, how the institution runs, how these products are structured, and then when they understand how the business runs, that's when, you know, we go ahead to do the financing, because we like to educate the customer such that in future we do not have situations of, you know, I expected this and I got this. So right from the word go, workshops like these, conferences, webinars, and a lot of other forums where we will do sensitization, we are happy to participate to ensure that the audiences understand Islamic financing and maybe also get a feel of how Islamic banking is different from conventional banking. The other really is to ensure that we do the financing itself. We need to create the impact. We must ensure that the benefits are felt in these communities. So when a business comes, we do, of course, assessments to see the potential of the business. The risk appetite of the bank has to be taken into consideration, the affordability of the businesses, to ensure that what they come for is actually what they need. Sometimes businesses come with a certain expectation, and following the conversations that we end up having with them, you realize that actually what they need is something else, you know. So right from the onset, we ensure that we understand the businesses, they understand how this model works, and then from there on, it makes it very easy for us to finance them and for them to, you know, comply with the terms and agreements that they will have signed on. So Islamic finance really, as the Prof mentioned earlier, it has ethics at the core of its products. There's no speculation. When a customer comes, from the word go, they know how much the total cost of financing is going to be over the period of the financing. If let's say they came today and they needed, say, 100 million, and they know the total cost after maybe 3 or so years is going to be 110. That's it. It's not going to change. The planning is done appropriately so that the customer at the end of the day complies without any doubts on how much they will pay at the end of the facility. So there is a lot of, like the Honorable Minister mentioned, it's ethical financing really, to ensure that there is no gray areas in the type of relationship that we develop with the customers. So as earlier indicated, if, you know, out of the, you know, the number of, let's say, the Muslim community who have not been able to benefit from conventional institutions because of riba, if, let's say, we co-opted those into this model of financing, imagine the kind of economic impact that that community can create, the expansion that those businesses can have, you know, the jobs that those businesses will create. So it's investment in real economic activity to see that you know, the returns are also tangible and felt, you know, across the economy. So as Salam Bank, this is what we will be doing exclusively. We are a fully fledged Islamic financial institution. As you know, the law now provides for what is called windows for the conventional institutions which would like to, you know, do a bit of Islamic finance. That also has been taken care of satisfactorily by the law. But for us as Salam Bank, we are a fully fledged Islamic financial institution, and everything we do is in compliance with the tenets, the commercial tenets of the Sharia law, of course supported by the governance structures of the institution, where we have a fully fledged Sharia advisory board to ensure that everything we do is indeed Sharia compliant. So when we come to give you a product, you will have confidence that this product is indeed Sharia compliant. Thank you.
Thank you very much, Mr. Mande. I am still a little bit with you. My last question to you for today is, the UN has set very ambitious goals for achieving sustainable development, and the duty extends to the private sector investors. What is Salam Bank's strategy in contributing to the achievement of the same in Uganda?
Thank you. So the SDGs, as you know them, there are many. There are those that we directly have an interest in. There are those that, you know, in the exercise of Islamic banking, you find that you are playing a role. But strictly, when you look at, let's say, economic development, SDG 8, we really, from the impact of the financing that we do in the economy, because of our investment in real, tangible economic activity, the volumes, the number of businesses we reactivate, the capacity of businesses, employment created to these, to the populations, we believe that is one key strong item that we play a key role in. When you look at, say, SDG 13 for climate change, climate action, really the conversation of of climate action and things to do with the ESG discussions globally, they are also very central in Islamic banking. So that naturally comes through prominently to see that institutions that are practicing Islamic banking actually also directly participate in the development of the sustainability of climate action. And as Salam Bank, one of our key strategic pillars really is to pay attention to the businesses that are directly in areas of climate, in areas of maintaining sustainability of the climate. When you talk about businesses, say renewable energy, we have a specific focus on them to see that we directly put investment in them such that the impact is felt. So our contribution as Salam Bank will be something, and put together with what other institutions shall contribute, we believe that will contribute to a sustainability of the country. Thank you.
Right, thank you very much. That was Mr. Michael Mande, the MD and CEO of Salam Bank, the first fully fledged Islamic finance bank in Uganda. Ian Mutiwa, the Chief Executive of the Islamic Finance Hub and Managing Partner, Signam Advocates. Business as usual. Islamic finance is business as usual. My first question for you is, what are the available opportunities for professionals now that Islamic finance is here?
Thank you very much. Allow me to speak from here. I think we've seen accountants, lawyers, bankers, and other professionals up here, and it speaks for itself that there's a lot of opportunity in Islamic finance. I'll speak authoritatively on this because when Salam Bank opened, I think Signam Advocates, MESA, and BDO are giving them their first bankable client. So we referred a client to them, and the synergies that come together should show you that professionals have a lot of work to do. One of the things that we need to learn is audit, tax, structuring, documentation, advisory, and all these come into play in this sphere of Islamic finance. So as professionals, wherever you are, whether you're an insurance professional for Takaful Insurance, you're looking at capital markets for Sukuk bonds, there's so much to do, and I would make a kalango for the hub that the hub is going to help you structure all these particular products, different products, Takaful, Sukuks, Murabahas, Musharakas, so that you know what you need to do as a professional and give proper advisory to your clients. Thank you.
Still with you. From a legal perspective, is Uganda ready for Islamic banking and finance?
Yes and no. Yes, part of it is we've been at this since 2008 for Honorable and 2016 or 15 for some of us, and we've seen it grow and create leaps and bounds for different products. Right now, the financial business or the banking business is up and running. I know the regulators of insurance are crafting regulations for Takaful at the moment. I also know that there are proposals for Sukuk being put into place so that the different aspects of a Sukuk bond can be issued. So yes, we've seen the Salam Bank being the first bank in Uganda to do Islamic finance, but we still have different sectors such as capital markets to grow, such as insurance to grow, and other sectors to have a fully fledged Islamic finance economy. But then also one of the tenets of Islamic finance is that it is not transplanted. You don't transplant what is in UK to Uganda or from Malaysia to Uganda. You have to craft something that is in the four walls of the country like Uganda. So we have unique aspects in Uganda, and as the law keeps developing, you're going to see amendments coming in force to suit the different aspects of Islamic finance as may be applicable to Uganda. So right now, yes, we have the law, but as we go along, we see different amendments coming into play, and I'm sure the Ministry of Finance and the URA will know that this will actually happen over time. Thank you.
So what Ian is briefly saying is that Islamic finance is an entire ecosystem, and the law will, a day at a time, make laws and regulations to ensure that we spread the wings into other factors, into other spaces. So while at it, Ian, one last question. How ready are your clients for Sharia compliant financing?
Very ready. I can pick on one. We have a client from Sri Lanka, Mr. Mafaz. If you please stand. He has flown all the way from Sri Lanka. They are doing power projects in Uganda. They have diminishing Musharak transaction already that they've already financed, but they're also looking at having this particular product coming into life in Uganda. So when he heard about this conference, he took a ticket from Sri Lanka to come here. So they are very, very, very ready.
Business as usual. Islamic finance is business in motion. So we have practically demonstrated. The panel has exhaustively dealt into the products, the tax treatment, the legal aspects have been broken down, and we have viable business. So this is a new opportunity. Please delve into Islamic finance opportunities, both banking and non-banking. I think we ought to have had someone to speak about the non-banking aspects. But we have a client here from Sri Lanka, and we are pleased to serve you. I'm now opening up the discussion to the audience. I'd like us to start giving your panelists questions. Okay, we have some questions that have come in. Okay.
Good evening to everybody. My name is Mutebi Alawi. I work with a Eurosat group of companies. I'm the CEO. We are a software and fintech company. My question goes to Mr. Mande. Yeah, I know you have an engineering in computer science and engineering background in computer science. You have talked a lot, the panel has talked a lot in accounting and what. What kind of arrangement do you have to partner or to collaborate with fintechs? I'm from a fintech background, and we have been implementing Islamic finance with most of the charity and circles at circle level. We have been providing digital solutions that enable them reach the underserved using the mobile handsets and some other things. So as you know, fintech is here to disrupt the physical banks and some other physical financial institutions. I know you have a plan to go fintech, but as fintechs here in Uganda that have, initiated different capabilities to develop digital Islamic finance solutions, what collaborations are you preparing for us so that we don't just work outside the ecosystem? Thank you so much.
Allow me to say salam. I've not had it since morning. Assalamu alaikum wa rahmatullahi wa barakatuh. All right, my name is Nanteza Nadia Malka, and I work with Hijaz Finance, one of the Islamic financial circles in the country. And hearing from the panelists, besides Salam Bank, the rest of the institutions, I would love to know, do you have separate Sharia individuals or boards that are advising on all these aspects? You're talking about accounting, taxes and all that. I've not had that element. Is it there? Because when you look at Islam, trust me, however much we quote everything, the clients might want to know what is the base, the Sharia base of every aspect of the financial ecosystem.
Yes, thank you, Sophie. Sophie, if you could also give an opportunity to our dear audience online, the couple of questions that came in. So if you could take the two that came in, then we can get back to the crowd.
Okay, there are quite a number of questions that have come in, some of which I think will be best answered by people on another panel. So I'll skip those ones for now. But
Sophie, there's one here.
Okay. Yeah.
Okay. A very good afternoon. My name is William Chizito. I'm the chairman of the board for Outlines, but I'm also a finance practitioner. A very interesting food for thought for Ian and my deal structuring guys. I'll exclude the URA friend. And how you're going to marry the principles of transactional banking with Islamic finance. In there, if you look at transactional banking, you have commissions, you have letters of credit, you have trade finance aspects in there. It's going to be very interesting. Probably tomorrow, Professor will tell us how you then merge the entire concept of trade finance in there, because you can't distance yourself from commissions, you will not distance yourself from brokerage, you will not distance yourself from agencies in your bid to structure these transactions. So I would love to, if my colleague Amanda can say something, I'll be glad, but nevertheless, food for thought for us. How do we marry these two? Because transactional banking is the future of banking. So how do I make sure I'm not breaching the Sharia principles, but at the same time fostering the future of banking? Thank you.
Sophie, we have a question here.
Thank you. My name is Yvonne from URSB. My question is, I'm a bit confused on earning interest and earning maybe a rental tax, say in mortgage financing. Because what you're saying is that you do not charge interest. But then in mortgage financing, how are you going to recoup your money? And what is that called? Is it still an interest, or are we just changing names from interest to some sort of rental income? That is where I'm a bit confused. Thank you.
We are a bit pressed for time, but the panelists who would like to take up some of those questions real fast. Ian, please.
Thank you. I'll start with the last question on interest and whether it's a different name. Interest as we know it is usually floating. It follows a certain criteria, so it can be up, down, up, down. One of the principles of Islamic finance is certainty. You must be certain. They're not oblivious of the fact that there is value for money. So money today has a different value from money tomorrow. Okay? So that fact is not left out. So what happens is when you get an Islamic finance lending, they will do calculations on if you're paying back this money in 5 years, what will be the value of this money in 5 years? Now remember, they also take a risk. The calculation could be over or below. If it's below, the bank takes a loss. If it's above, the chances of you actually sharing on that extra amount. So it is precise to the point that you will know if I get 100 million today, I will pay back 103 million in the next 2 years. It will not be 104.5 or 102.3. It will not be that. And even if it's that, there are mechanisms of covering up that particular gap. So interest is floating and it's not certain. Today, the interest rate is 21%. Tomorrow, it will be 19. Then it will be 18.5. It keeps floating. But for Islamic finance, there'll be something fixed. Now, for the rents, it depends on what product you're actually getting. If it's an ijara, you're leasing. So you lease from the bank and it's a rent. So you lease to own, so to speak. They will tell you this will be your rental payments for a period of time, and as you're paying it off, you're leasing to own. It's more of a finance lease of sorts, as a conventional bank would go. So depending on the structures, I don't want to get into deep of the structures, but depending on what structure you're getting, you can have an ijara with a diminishing musharak, you can have a murabaha, you can, there are different structures, and you can, once your structure is done, then you know exactly what you're going to pay to the letter, not more, no less.
Thank you very much, Ian, for that clarification. Are there any other questions? Panelists, does anyone want to answer something that was, yes, please, Mr. Tusave.
Yeah, I'll answer the question around whether these other professionals who are not banks, someone is concerned whether we have Sharia boards at BDO or at Signam or MESA or in other places. So we are lucky that the question of Sharia boards has been addressed by the law, in the sense that for banks that are offering Islamic finance products, it's a legal requirement that they have Sharia boards. And those Sharia boards will be reviewing the products to make sure that whatever product is going out as an Islamic finance product, it is compliant with Sharia. Now, John Jett seated at BDO, that work has already been done for me. And thankfully, the laws, for example, the tax laws, they simply say if an Islamic finance product is this way, treat it this way from a tax perspective. So by the time a product comes out into the market, the question of Sharia has already been resolved. Now the other professionals, the lawyers, the accountants, the tax advisors, are coming in now to provide additional support from their professions. They are not answering the question of Sharia because that has already been answered. But that is not to say that as professionals, we don't need guidance. I will tell you that the little Islamic financing I know, I have learned it from people, from experts who have an understanding of Islamic financing. Professor was here this morning. There's a lot I learned. So even if we don't have Sharia boards, we are learning from the experts who have Sharia knowledge, and also embedding our professional expertise to support one another and work together into the system that serves the market, the products, and the clients, such that at the end of the day, the imperative or the objective of, say, financial inclusion is reached to those that I need. Thank you.
Thank you very much, Mr. John Jett Tusave. You have been very crisp. Maybe just to add to what he has said, even the regulators that have structured the laws that govern how we implement Islamic finance, starting with Bank of Uganda. Bank of Uganda does not have a Sharia Advisory Council. It was there in the law, in the first amendment in 2016. However, that role was taken out, and I don't think any council has ever sat at Bank of Uganda. But the law has been drafted in such a way that it is Sharia compliant. The subsequent laws that have been made in this country, experts, Sharia experts were part of the process, and the laws were crafted in such a way that they are Sharia compliant. Islamic finance is going to be a journey, even in countries where it has succeeded. It is still a journey. It is a work in progress. So my appeal to everyone in whichever category you practice, whether you're a Sharia enthusiast, whether you're a lawyer who is interested in practicing Islamic finance, accountants, auditors, bankers, we're all going to need each other. And it is important that we hold hands together, work together, grow together, go over the challenges together, and ensure that we push this dream of Islamic finance forward, because it has the capacity to liberate us from the challenges of the economic system that we have today. Thank you very much. I have been Sophia Chigozi, and I would like to thank the amazing panel that we have this afternoon. Ian, the Chief Executive, is going to help give out a few presents that we have for the panel. Thank you very much. Have a good day. Our first token of appreciation is going to go out to Mr. Michael Mande, the MD, Salam Bank. The Director Tax, Mr. John Jatusave, BDO. This was prepared for Ms. Sarah Chelengas. The gentleman will hand it over to her. Thank you very much. We thank the URA for supporting us. Ms. Helen Nachiriowa from Shonubi Musoke Advocates. Thank you very much for sharing your experience with us. And lastly, Mr. Nicholas Mushaventa. Thank you very much, sir. The CEO, Managing Partner, Signum Advocates, Mr. Ian Motiwo. Thank you very much, sir.
Maybe to show you what the appreciation message is about, those who have not seen it. It's a simple plaque. Thanking the panelists, the members, for honoring our invitation and being part of this conference. Thank you very much.
All right, thank you very much, Sophie. Ladies and gentlemen, a big round of applause to Sophie and Hadia panel. That was a very extensive and very richful deliberation. That was a Sophie's masterclass. And I think just a photo moment. Dear panelists, if you could just all come in with your plates. Just a photo moment of all the panelists and Sophie as well. The panelists on panel A, if you could just make your way very briefly to the stage. Very quick photo moment. Sophie, you could kindly join your panel as well, just over here. Our cameraman, please get ready. Very quick, our dear panelists, Miss Helen Nachiriowa, Mr. John Jet Tusabe, Mr. Nicholas Mushaventa, Mr. Samuel Ameo, and Mr. Michael Mande. Very thankful. Cameraman, are we ready? Oh. Ladies and gentlemen, just another round of applause to the esteemed ladies and gentlemen who have deciphered and broken down for us this topic, yeah? They've cared to break down the nitty-gritties, but also give the humble experiences around this topic. And certainly there is need for them to share extensively. The masterclass gives you that opportunity, and very happy. Thank you, ladies and gentlemen. That was an amazing panel chaired by Sophie. Sophie, very much thank you. And we all agree, yeah, we can't exhaust the debate in here. Very many intricacies in there. But yeah, it's a learning opportunity, a humbling one. So we are carrying on the debate, we're carrying on the discussion, and it's getting out of the walls in here. Our dear audience, we still take note of your presence. Thank you. I know our sugar levels are running very low, but Mesa Bidione Signam Bagabude, so our breakfast is still in plenty. Our brunch, yeah, it's getting to lunch. Our brunch is still in plenty. Feel free to take a bite. Our online people, the delivery men on their way, so stay patient. But yeah, that takes us to we're carrying on the debate. The same energy, yeah, the same enthusiasm is going to panel B. And panel B is equally comprised of very distinguished panelists. And these will be speaking to aspects around development finance and the policy for government-backed investments and public-private partnerships. And this panel is very honored to have our dear clientele, yeah, but also people from Salam Bank, people from Microfinance Support Center. These are Yes, these are very esteemed practitioners. These are people who have partaken and been part of the Islamic finance, have experienced it. So it will be very humbling to peep into the expertise and the experiences. And ladies and gentlemen, this panel will be moderated by Mr. John Jett Tusabe. John Jett is a director of tax at BDO, and he equally heads the tax department at BDO that has been very, very instrumental in helping some of our clients around tax aspects and considerations of these Islamic products. So, dear John Jett, I invite you to welcome your panel, and let's have those deliberations as well. Please join me in welcoming John Jett to take us through panel B. Thank you.
Thank you very much, Edwin. Just be sure this is going to be nice dessert. Allow me welcome to the panel Dr. Sulaiman Luja. You're most welcome. Dr. Sulaiman Luja is a banker. He's a Sharia advisor and an auditor who has taught Islamic finance for over 10 years. Mr. Luja, you're welcome. And online, we have Peter Norris, who is a counsel at Latham and Watkins LLP, which is a law firm based in the UK. Norris, you're most welcome online. We are looking forward to hearing from you. Norris advises clients on a broad range of complex banking and finance transactions, both in the GCC region and internationally. Allow me to also welcome Sophia, the amazing Sophia Kigozi. Sophia, please come and join my panel. Sophia is a partner at Mesa Advocates. She heads the commercial projects and alternative finance practice. She has 9 years experience, 9 years, but she looks very young. Mr. Olgembe Sulaiman, please join us. You're most welcome. Mr. Olgembe Sulaiman is the money man at Salam Bank. He's the CFO and looks after the finances of Salam Bank. He has a master's in finance from Coventry University, UK, a postgraduate in Islamic finance from Bahrain Institute of Banking and Finance. Allow me also welcome Mr. Mafaz Ansa. Mr. Mafaz has landed in Kampala to come and share his experience on Islamic financing. He's a seasoned finance professional. Mr. Mafaz is a CFO at Vidlanka PLC. Vidlanka PLC is a listed renewable energy company in Sri Lanka and has several energy projects within Sri Lanka, outside Sri Lanka, including Uganda. You're most welcome, Mr. Mafaz. My questions are much simpler, so don't worry. I'll start off with Dr. Sulaiman Luja. Uganda being a country with minority Muslims, what's the future of Islamic finance in Uganda? Where do you see this going from a development and financial sector growth perspective?
Thank you, John. As mentioned before, in fact, Uganda is late to implement Islamic finance. We had to implement this way back in 2016. Several countries have adopted Islamic finance, Islamic banking. You are aware that UK, United Kingdom, has adopted Islamic finance to the level of becoming now the global gateway for Islamic finance. It is competing with countries like Malaysia, countries like Bahrain, to become the world center for Islamic finance. So we have much we expect from Uganda. Of course, you see, the whole world is looking at Africa now, and is looking at also the sub-Saharan Africa in general, because of the untapped resources which are still here. Many of the countries in Europe, in the Middle East, they have already exhausted their opportunities. Now the future is with Africa, and the future is with Uganda. If you look at, for example, Sir Eddie George, this is the late former governor, is the former governor of the Bank of England. What he said that when I looked into it a bit more, it seemed to me that in fact many of the financial products commonly used in this country already have had some, at least, of the characteristics consistent with the teachings of the Quran. If only we could come to a better and more precise understanding of what Islamic financial products are being talked about at that time. Indeed, it seems to me also that as a matter of general principle, a wide range of financial products would benefit the whole of our community, and that Islamic finance or Islamic products could prove to be attractive beyond purely the Muslim sects. So this is open to everyone. It's not about only Muslims, as has been talked about here. In fact, when you see at Microfinance Support Center, we have been doing this for now 7 years. And we are responding to the needs of our clients. Most of our clients are here, the circles, because for us, we work on people in groups, and we have been providing Islamic financial products since 2016. And we are lucky that even we have the Islamic Development Bank. It has set up the hub here in Uganda. You know the countries which we take in Uganda. This hub is taking Djibouti, where this bank, Salam Bank, is coming from, Somalia, Mozambique, and also Uganda and Botswana. You see, these countries are now having a regional hub here in Kampala, and we expect that much is going to flow in terms of direct foreign direct investments into Uganda. So it is open to everyone, as the central bank late governor has said. Everyone will benefit from Islamic finance.
Thank you very much, Dr. Sulaiman. Sophia. Growing presence of Islamic banking needs to be accompanied by the development of effective regulation and change of narratives. Having been at the helm of developmental changes in Uganda, what should we expect in the emerging preview of Islamic banking and finance?
Thank you very much, Mr. Tusabe, for the question. As far as regulation is concerned, I think for now we do have adequate laws in certain sectors, especially the banking. And in the takaful or the insurance, the regulations are being worked on. What we also need to expect further developments, especially in the capital markets, in the mutual funds, as well as other legal developments as they will come along. However, I want to speak to the issue of Sharia regulation. The whole notion of Islamic finance, when you look at the laws, they will not specifically point to a particular Sharia provision, but we are very cognizant of the fact that Islamic finance is governed by the Sharia. So to avoid instances where Islamic finance has been abused, especially in countries like India, there has been a very recent scandal in India, among other countries. I'll not delve into the examples because of the interest of time. But every time you move away from what the Sharia says, that is when problems come. So we have to be very cognizant of the entire Sharia aspects of finance to ensure that Islamic banking is implemented the way it is supposed to be implemented. Yes, then the rest of the professionals, the lawyers should do what they are supposed to do, the bankers should do what they are supposed to do. Transactions should be structured as specifically as they should be structured, and things should be able to move.
Thank you very much, Sophie. The good thing we have you, so we won't get it wrong. Mr. Mafaz, we know that Islamic banking has been big time in Sri Lanka. Could you share with us what has been your experience with Islamic banking in Sri Lanka briefly? Thank you.
Okay, thank you, John. And thank you, John, for the question. And thank you, Ian, for that introduction before. Actually, Sri Lanka is an island nation based in Indian Ocean. Okay. Okay. Actually, I have come from, like Ian correctly mentioned, I have come from Sri Lanka to Uganda. In fact, I have flown from one pearl to another one. Sri Lanka is known as Pearl of Indian Ocean, and Uganda is known as Pearl of Africa. So we have more things to be common. Okay, both countries have into tea. Sri Lanka is home for the Ceylon tea, and we see Uganda also as another prominent tea producer. And when we really, we are in this country for nearly 10 plus years, and when we really go out, we feel more like home than away. So coming back to the another similarity is that in both countries Muslims are minority, like 10% or less, and luckily in Sri Lanka we have started Islamic finance good 26 years back. The first Islamic Finance Institute, it was a non-banking financial institution, which later it started in '97 and later became the first first and one and only fully fledged Islamic bank, which is now known as Amana Bank. On top of that, there are about 5 window operations and a number of non-banking institutions offering financing solutions. So another thing that I would like to mention is in Sri Lanka, there is a good extent of stakeholder engagement they have built up over the period. That includes conferences of like this, and in fact I'm glad to see that this become the inaugural one. So we like to see more and more things like repeating. In Sri Lanka, as of now I am speaking here, presently there is another conference happening that is some South Asia, some Islamic Finance Forum, where the countries, the professionals from this whole region, from India, Pakistan, Bangladesh, Nepal, Malaysia, all taking part in a similar forum. So that is continuously happening. And also there are other things like recognitions. Now when industry, when it moves along, there are going to be more players. Salam Bank being the one and the very first, there are going to be more players going to come in the future, and no more professionals going to come, and more transactions going to happen. So those kind of things are being recognized, celebrated, and more and more encouragements given. So in Sri Lanka, we as a renewable energy company, we embraced Islamic finance back in 2005. So that is when we are doing the second project. First project had been financed under a conventional facility, but we had some experiences. When we had the opportunity to embrace Islamic finance, we moved into this, and from there all our funding sources have been Islamic finance compliant. So when we started our first project in in Uganda, so that was the very first venture for us, as a Sri Lankan listed company, to engage in project development overseas. So we really needed Islamic finance. So I recall we are having meetings with local stakeholders, but unfortunately at that time the industry is not very premature stage, and the regulations were pending. So at that time we had to bring the finances from by way of a syndicated facility from 2 window operations out of Sri Lanka. So likewise, and when we did the second project also, the situation was the same. So now when I really see the regulations in Uganda are far better and advanced than what we have in Sri Lanka. But Sri Lanka ensures that the equal treatment of Islamic finance and the conventional finance product based on the form. Right. In Uganda, we see each and every act that could create any ambiguity being amended, and that the appreciation should go to the regulators for taking the time and effort to do all those changes, so that the industry could flourish from this point forward. Thank you.
Thank you very much, Mafaz. Good to see that you've been able to grow your business with Islamic finance. And kudos to the regulator in Uganda. Sophie, you have good news to take back to the central bank. Mr. Walgembe, Mr. CFO, Islamic finance hinges a lot on trust and transparency by both the borrower and the lender. How are you going to navigate this in light of the credit risks involved in Islamic finance products?
Thank you. Bismillahirrahmanirrahim. Thank you, Mr. John. About this finance risk and the credit risk which we are going to take on in an environment where there is a lot of credit risk in finance. Yet in Islamic banking, there is a lot of trust. The first requirement, when you are doing financing with any person, is who are you dealing with? That's the first level. In the Quran, Surah An-Nisa, which is chapter 4 of the Quran, Allah tells that clearly, that please look at who you are entrusting your money with. Never finance somebody, I would not like to use the language, somebody who doesn't understand, somebody who's not trustworthy. Never entrust your wealth with that person. So from the Sharia perspective, That's the first hedge they are giving you, that please do a due diligence to the person you are entrusting your money with. So the first level of risky protection we are going to take, or which Islamic banking takes, who are you, which person or which kind of business are you dealing with? Are they sound enough? Do they have enough track record? That's the first level we are supposed to deal with. The second level, of course, in all the many other areas, trust is the area which is it. So from the first perspective, since we are going to make most of the financing, but mostly partnerships, we have to look at who you are, we are dealing with. So it means ethical financing, as has been said, is the key factor to look into your area. It means that the credit rating, which may not only be in terms of CRB and other rating agencies, we have to look at you individually and all the credibility. It means financial history, financial soundness, not in terms of money, but in terms of your behavior. That's the key area which you have to look at, because we must not deal with the financing where we expect losses. So it means you don't go at a level of evaluating who you are financing. You must have a strong team which is looking into all aspects. The issue of chasing money for the sake of beating the target to get the profits, to get the how much am I giving out, has to be looked at very seriously. That is one first layer of the credit management. The rest will take the normal rating, the normal evaluation of the person. But the key important issue, this transparency must be exhibited by us in telling you the truth and you telling us the truth. So when it comes to recoveries, we have a lot of thinking that somebody who's taking the financing from us is not thinking about only the profit or the losses or whatever, the business only. Look at things beyond that. Because in Islamic banking and Islamic Sharia principles, taking a debt is one of the biggest undertaking we take in life, because it doesn't stop here. It means if you are giving us some stake into your estate if you happen to die. So it will not stop there and you telling us, okay, this if I just live around. So it's something which goes deeper. So somebody who's coming to contract a financing with us has to have that thinking that, please, if I'm intending to default, a lot is at stake.
Thank you so much, Mr. Olgembe. You've heard, if you're not ready to tell the truth, not ready to be transparent, please, you are not welcome.
Yes.
Norris, online. From your experience with diverse jurisdictions, how best can Islamic finance products be structured for financial institutions? Briefly, tell us.
Thank you, John Jett, and good afternoon, ladies and gentlemen. So I'm a banking lawyer, so I come at this from really an institutional debt finance angle. And how best, I would say, is really with a commonality of approach and a drive towards standardization. That's, after all, how you create a deep, liquid secondary market of tradable instruments. So for that, I guess you need a few things. You need products to be structured under common standards and enabling regulations, and we've heard quite a lot about that today. Under standardized documentation insofar as is possible. You need, obviously, support from scholars, consultants, skilled workforce of lawyers, bankers, and accountants, and many of you in the room today. And then really there's, importance that can be placed as well on, benchmark or landmark transactions in the market and the establishment of market precedent over time. So just to take the first case, in the case of common standards, You know, I practice in Saudi Arabia. The entire system of law here is based on the Sharia, and many of the common financial products that you've heard talked about today, be it Marabaha, Madaraba, Musharaka, or any combination of them, have their basis in Saudi Arabian law. But even then, there are differences in interpretation, and in many jurisdictions around the world, there's that disconnect between local law and how you enable the Islamic finance on a regulatory level. So we've heard a lot today about how that's being addressed, and that's a great thing. Each bank then on top of that needs to develop its own policies as to Sharia compliance with a board of its own Sharia scholars, potentially many of which will be shared between banks. And also at the regulatory level, the regulator may also wish to retain Sharia advice, so to determine what can be sold or traded on a Sharia compliant basis. And then just very briefly, just to touch on the documentation level, what we've seen in Saudi Arabia and indeed in the wider GCC is a development of debt finance documents in inverted commas around common loan market association principles. So while you have the nuts and bolts of underlying Sharia compliant transactions, be it a Murabaha or an Ijara, when it comes to market standard provisions such as covenants or assignments and transfer provisions, yield protection provisions, agency provisions, all of those tend to follow a very standardized form. And that means that when a lender, for example, takes an assignment of a loan, they broadly know that they're getting something that looks and feels a certain way. And in Uganda, you can borrow that approach from other jurisdictions, and that helps to create a very healthy secondary market. And then finally, I guess you can't underestimate the importance of precedent. Sharia doesn't necessarily follow precedent, but the market really does. And we've seen around the world with jurisdictions attempting to create a nascent Sharia compliant Islamic finance market. The importance of those benchmark or landmark transactions, particularly in the Sukuk space, the importance that's placed on those transactions, and also that obviously they create a good liability management tool for Sharia compliant financial institutions in the market. So, to summarize, really from a debt finance perspective, from my perspective, it's really creating that common set of standards and uniformity of documentation. I would see that as being key.
Thank you so much, Norris, Peter. We appreciate the insights on structuring. As you've heard, it is not something you can say you are now an expert. Members, just a disclaimer. Please don't move out of this hall, or for those online, and you're calling yourself Islamic scholars because you've attended this conference. You need to get certification from the Finance Hub. As you get coupons for lunch, please don't forget that lunch is available. And at this point, there are many things we would like to discuss, but in the interest of time, allow me to say thank you so much to my panelists. You've been amazing. Thank you so much. A round of applause to my great team. Thank you so much. More will be discussed at the Islamic Finance Hub and the masterclass and online. And we are going to be sharing more information. So please be on the lookout. Ian, thank you so much for being the Kanyama, carrying my goodies for my wonderful panelists. The first one is going to Mafaz answer. Mr. CEO, help me to hand it over. Thank you very much. Thank you, Mafaz. Mafaz. The next one is to Mr. Olgembe Sulaiman. Mr. CEO, do the needful. We appreciate your efforts in this matter. Sophia Kigozi. We have something for you. Haven't forgotten you. Take a picture with the CEO. Dr. Luja Sulaiman, Professor, we thank you so much. Peter Norris, let me ask the CEO to show you your thing. It will be coming to you via DHL, but just to make sure you're seeing it with your name. Can you see it? Norris, Peter?
Yes, thank you very much.
Thank you so much. Ian has taken a picture on your behalf. We are going to take a group picture for the panel. Thank you. And I hand over back to the MC himself.
Ladies and gentlemen, a round of applause to panel B that was chaired by John Jett. Thank you, panel B. That was very, very amazing. Very interesting discussions, amazing experiences, but also, yeah, lessons for us to pick and draw from the bold experiences. Thank you, John Jett, for moderating that session. That was John Jett's masterclass. And John Jett's panel was comprised of Professor Luja Sulaiman. Those of us who follow Islamic finance, you can't speak Islamic finance and you don't put professor somewhere. Thank you very much, Professor. Miss Sophia Chigozi, we all see our passion. Thank you very much, Sophia. Mr. Mafaz, answer, that was very kind of you to fly in just to partake and share experiences with us. That's very kind of you either. Mr. Peter Norris, all the way from the UK, that's very, very kind of you. Thank you. Then Walugambe Sulaiman, part of the Salam Bank. We can't discuss without involving them. You took a very bold step, and thank you for sharing your insights as well. Thank you, ladies and gentlemen. Those were very candid discussions as well. We're nearing the end of our conference, and just like John Jett noted, lunch is available in the house, so please feel free to, coupons are being given, so in case you don't have a coupon, reach out to any of the other members from Signum, Mesa, and BDO. They'll be very happy to support you. I just want to recognize some of the amazing team that has put this together. The Signum team in the house, if you could just stand up very briefly, please stand up. All our colleagues from Signum, they're very active at the back here. Thank you very much, ladies and gentlemen. They have been very, very helpful. The team from Mesa, if you could just stand up as well for recognition. Thank you, ladies. Part of the people that are doing all these. Then definitely the amazing team from BDO. Very many of us in the house. Please stand so that the team can just partake. Very selfless, ladies and gentlemen. Very big team. So reach out to any of those kind enough to share the cards and the contacts. Reach out to them. Carry on the discussion. It never ends. And this has been an opportunity. So feel free to engage with any of us, professors here, panelists are here. So network, collaborate, share contact. The opportunity comes once. Then still, I'll just invite the gentleman who has been at the helm of all this, the CEO of the Islamic Finance Hub, but also the managing partner at Signum Advocates, Ian Mutibwa. Ian, if you could just come and wrap it up for us.
Thank you very much, Edwin. I'll wrap it up with a vote of thanks to various people who have contributed to this. First and foremost, 4 points by the Sheraton, the hotel we're at. Thank you very much. Thank you very much for that. There's a partner, ISFIN. ISFIN has also been a partner, part of this. Thank you very much, ISFIN. Latham and Watkins, thank you very much for being a part of this. Cambridge Institute of Islamic Finance, Professor Da, thank you very much. Power Rides, who gave us transportation, thank you very much. The regulators, Bank of Uganda, URA, Ministry of Finance, thank you very much for being a part of this. The service providers, those who have been on the Zoom, that have been on the microphones. Thank you very much. The team that made this together, my partners, Mesa and BDO and Signum team, thank you very much. I'd like to specifically, this one now come from me, specifically, to call each and every one of you, the people who have been behind this, so that you see them as they receive their token. First and foremost, Mr. Kenneth Makanga, Managing Partner, BDO. Moses, Emron. Moses has all the setup you see. He spent the night here. He has been the shadow behind, but thank you very much, Moses. Really appreciate it. Mabel Chisaka, Managing Partner, Mesa. Mabel, thank you very much. Our MC, Edwin Echiba. We didn't forget you, sir. We have other people who didn't manage to make it. There is Haj from Latham and Watkins. He couldn't make it, but his plaque is here. We shall email it to, DHL it to London. And the chairperson of this organizing committee, Ms. Rachel Kembabazi, part of Signum team, she's also not here, but her plaque is also here as well. Before I finally send you to lunch, I'd like my deputy to come and just say just one word about the hub, and then we can then send everyone for lunch. But thank you very much, all those who have managed to come, those who have paid for the hub, thank you very much. And we look forward to giving you yet another Islamic Finance Conference next year. But more importantly, the hub is going to be running throughout 2024. And please register and come and learn and come and be better at Islamic Finance. Thank you very much. Sophie.
I can speak from here. Thank you very much, all of you, for honoring our invitation and sharing with us. I am reminded of a story from the Islamic books of fiqh, and I cannot live without sharing it with all of us here. When the Prophet Sallallahu Alaihi Wasallam died and his companions came back to Medina, there was a cousin of the Prophet called Ibn Abbas. Ibn Abbas was very beloved to the Prophet Muhammad Sallallahu Alaihi Wasallam. And he told his friend that let us go to the companions of the Prophet and collect a hadith from the companions so that we can be able to keep the knowledge that the Prophet left with us. But then Ibn Abbas told him, me I want to go and play with the pigeons. So Ibn Abbas went and played with his friend went and played with the pigeons, and Ibn Abbas slept at the doors of the companions of the Prophet, and he collected a hadith from the companions of the Prophet. Years later, when his friend came back to Medina, the house of Ibn Abbas had become the first university in the history of Islam. So I encourage all of us, let us join together. Let us share whatever we can about Islamic knowledge, about knowledge that is relevant to Islamic finance. It does not help to foster a division on the basis of faith for as long as it is the correct knowledge. And with that, that is what we shall be sharing at the Islamic Finance Hub. I am super privileged and super happy for the team that we have together, because we are going to walk an amazing journey, inshallah. Enjoy your lunch.
Thank you very much, Sophie. Ladies and gentlemen, just before we depart for lunch, just an opportunity, this being the inaugural conference, I kindly invite any of us, please come in and just take a group photo. It lives for memories. Just very briefly, part of us will be standing right here, the rest can use the stage. Our lunch is getting cold, so if you could please join me on stage and we just take a very quick photo moment, but also a memorious moment for us as a few of us, those that are